just because you will have a divided government, and the Republicans will maintain control most likely. So I think for many ways it's not going to have a direct impact on changing the vote in Georgia than where it would be.
Okay, you are a trade specialist. Let's talk a little bit about that. What are you expecting in terms of the trade agenda from the Biden administration? We've just been talking about Brexit and how tricky it is to get deals done, and Brexit looks like it's far from over at this point. What is your assessment of what the Biden administration is going to deliver on this front?
So again, the Biden administration will face a divided government, or very, very closely held splits. And I think this is going to make passing any big sweeping trade agenda movements difficult. Moreover, so we really aren't expecting anything much different than what we've seen with Trump. And it's interesting because in many ways, Trump has actually forwarded the Democratic trade agenda much more than the previous two Democratic presidencies were able to do. And so I think where we will see movements is perhaps in some of the areas that were very contentious with some of our more prominent trade partners, such as Japan and Europe, in issues around national security tariffs on steel and aluminum and so forth. So I could see those being unraveled. But I wouldn't expect there to be any very big new trade agendas, new trade agreements being negotiated, at least in the first couple of years. They will probably look to extend more agreements to EU directly. There's discussions about the UK, but those aren't going to be a top priority. Also, maybe some of the going back to looking at some of the Asian-pact issues. So I think those are the areas. But what's mostly going to change is actually going to be the approach to trade. And that is, instead of using the unilateral domestic laws, right, retaliation types of anti-dumping, countervailing duty type of laws, using a multilateral approach through the World Trade Organization. That's something that Trump absolutely refused to do.
Yep. Sort of objectives the same, approach very different. Sharon, appreciate your time this morning. Thank you very much indeed for sharing some of it with us. Sharon O'Halloran, Columbia University professor. Thank you very much indeed. Up next, what are we going to be talking about? Josh Sharfstein, Johns Hopkins University Bloomberg School of Public Health Vice Dean, is going to be joining us as we continue to roll out the vaccine on both sides of the Atlantic. We'll get his assessment of how it's going. That's next. This is Bloomberg.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back. This is Bloomberg Surveillance. I'm Guy Johnson, in for Francine Lacroix and Tom Keane, both of which have a well-deserved day off. Let's talk vaccine distribution. We're continuing to track the virus. And during this whole phase, Bloomberg has developed a unique partnership with the leading authority on COVID-19, Johns Hopkins. It's been at the forefront of the international response, as we all know. Every day we bring you insight from experts in public health, infectious disease and emergency preparedness as a result. Joining us now is Joshua Sharfstein, Johns Hopkins University Bloomberg School of Public Health Vice Dean. Good morning, Doctor. Thank you very much indeed for your time this morning. Look, can you give me your assessment thus far of how the vaccine rollout has been proceeding stateside?
Sure. I think it's been proceeding pretty well. I think coming out of the FDA advisory committee meetings and authorization, people have a pretty good sense of what the vaccine is. We're seeing a lot of vaccination at hospitals and now increasingly at nursing homes around the country without any real surprises. There are a few allergic reactions that are not entirely, are not surprising really, but really no major problems, and people still really excited to get the vaccine within healthcare and increasingly at nursing homes. But I do think it's going to get more difficult very soon.
Why?
Because once we go beyond the places where the distribution system is built in, like a hospital can turn around and vaccinate its staff and hopefully some of the community health providers nearby, or a nursing home where there's a partnership with pharmacies to go to the nursing home. There are only so many nursing homes. It's a lot harder to figure out where to vaccinate, how to find people who are at the highest risk. For example, older adults live in homes, they live in assisted living, they live in senior housing, and as you get into essential frontline workers, they live everywhere. How to actually set up vaccination in a way that they feel comfortable going, that they can really access despite, working full-time jobs. All that requires a very strong public health system, and we just got the funding yesterday for vaccine distribution in this country. So I think there are going to be hiccups around the country.
Okay, so let's talk about some of the limitations and some of the opportunities here. I want to talk about the opportunities first of all. As you say, with the Pfizer-BioNTech vaccine, and to a certain extent with all RNA vaccines, and I'm talking mainly about the Moderna one here, there is a temperature stability transportation factor which you've got to bear in mind, which makes it much easier to deliver from kind of centralized nodes. We are waiting now, we could potentially get clearance this week for the AstraZeneca vaccine here in the United Kingdom, and we're looking for the J&J vaccine clearance fairly early on next year. The J&J vaccine is a single shot, which obviously reduces friction, and it's alongside with the Astra vaccine can be stored at much higher temperatures to maintain stability. You can keep them in the fridge, basically. How big a shift is that gonna provide in terms of this vaccine rollout process?
Well, I think authorization of more vaccines is going to help, first of all, for supply, because there'll just be more vaccine around. Second of all, because as you point out, they're easier to move around, and they can go in smaller groups. Like the Pfizer requires this huge batch to be defrosted at the same time, which is hard for a small clinic to handle, for example. But I do think it's still going to leave the actual mechanics of setting up vaccine clinics, figuring out where to put the vaccine, going to try to reach hard-to-reach communities. So I think it's going to help with part of the problem, but not the whole problem. I think we're going to have to see the investment in the public health system really pay off, and public health departments, despite a really brutal year last year, turn around and figure out a way to push vaccine to communities that really need it.
Let's talk about staffing and also the interaction between what is happening on the ground at the moment with the surge in the case counts that we're seeing around the world, and also kind of the staffing to be able to deliver the vaccine. Is it a zero-sum game? Is it that if we are dealing with more virus cases, we have less resources to vaccinate people? Is it a zero-sum game when it comes to staffing on that count?
Well, certainly it is in a lot of places. I mean, it may not be perfectly a zero-sum game, but there's a lot of competition. You know, the healthcare system really does step in to lend a hand to public health when you have major projects like vaccination, but the healthcare system is spilling over, as it is in some parts of our country right now. Then they really can't do that. And similarly, the public health system tries to help out the healthcare system, you know, through planning, through messaging, through testing, all these different things. It's the same staff. There's no extra staff for vaccination. They've all been pulled to help with the response. So I think it is going to slow down vaccination in those places that are overwhelmed.
Doctor, thank you very much indeed for your time today. Thank you very much indeed for the update. Joshua Sharfstein, Johns Hopkins University, Bloomberg School of Public Health Vice Dean. Equity markets generally quite well bid on the back of the stimulus and the Brexit deals done. Up next, we're going to carry on the conversation. More Bloomberg surveillance, the simulcast on television and radio. This is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
Central banks are showing no sign that they want to take their foot off the gas.
We still have momentum, but we are losing momentum at a critical time.
We're looking for a reboot and
to restart and recover. And I think that's really the theme for next year.
The biggest stimulus that's going to come is the vaccine.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others.
Next year is going to be a year of two halves.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City and Berlin, for our audiences worldwide, a very, very good morning. This is Bloomberg Surveillance, live on Bloomberg TV and Bloomberg Radio. I'm Carol Master, alongside Matt Miller, Jonathan Farrow, Lisa Abramowitz, and Tom Keene. They are getting a well-earned rest, I would say, because it's been quite a year, Matt Miller.
Smart.
Smart.
Yeah, good to take the last week off, refresh, recharge the batteries for 2021. Should be a better year, certainly if the vaccines kick in. Now, here in Germany, we just started vaccinating people yesterday. The health minister, Jens Spahn, does say they want to accelerate that process, but being the possibly most bureaucratic country in the world, it's probably going to take a lot of time. And even in countries that have started earlier, like the U.S. and the UK, I don't think experts expect the benefits to come until the early spring. So I think vaccinations are key, but right now, global markets really are focused on what's going on in Washington, Carol, on Donald Trump finally signing that stimulus bill, and that's really the impetus for the risk-on feeling that's rotated around the world in equities.
Well, you talk about vaccines, more than 4.4 million have been given, but you're right. I mean, many of the issues that we've been dealing with the last couple of months, really all of 2020, continue to carry into 2021. And as you said, though, we are seeing some optimism in the markets, and we definitely are seeing that as a result of what we got from Donald Trump. So there is optimism around the world. We will see, though, how long that lasts. Take a look at S&P 500 futures. You can see just up about 0.7%. Taking a look at that 10-year, you can see a little bit of movement there as well. New York crude just up about 1% there, 48.68 a barrel. So that is kind of your market set. But Matt, no doubt about it. Listen, our big main story, and it was really kind of fascinating since last week to kind of watch this process, to see an expectation that this stimulus program would go through, and then to have Donald Trump, the president, put a stop on it, and then, of course, late last night, Matt, actually getting it through.
Yeah, absolutely. Looks like things are falling into place with first the vaccine starting to roll out, then you had the Brexit deal, and then Trump finally signing that bill. I want to tell you, at least here in Germany, we're at a record high once against the DAX index. Germany's benchmark is at a record high year to date, only up 3% compared to the S&P's 15. But if you're a dollar investor in German stocks, then you're up about the same, 15%. Let's talk more about that political issue in Washington that really drives global market sentiment. Kevin Cirilli, Bloomberg chief Washington correspondent, joins us to discuss. And Kevin, my main question is, why did Trump sign the bill late? As I understand it, some damage may already have been done for unemployed Americans, and nothing really changed in the bill.
There was immediate confusion at the end of last week, and now immediate clarity in terms of a market perspective, in terms of the unemployed perspective, as well as just what the final few weeks might bring. Now, there was rumors that the president could deploy what was known as a pocket veto, which would have left the lawmakers and leadership on both sides of the aisle, Matt, scrambling to find some path forward. But all of that now, yesterday's news, because with President Trump signing this stimulus into law, it allows him to, one, say from a political record standpoint that he had advocated for additional funds, but secondly, that there was not that type of confusion from an economic perspective. And candidly, that's what lawmakers who I talked with last week were very much concerned about, that the clock on the Senate and House floor would eventually expire and that the window for a path forward would ultimately close.
Now, I know Larry Summers wrote an opinion piece for us on Bloomberg saying that $2,000 is just too much, and a lot of Americans definitely have money in the bank. But, Kevin, there are many other Americans who are out of work, who can't afford to pay their monthly food bills, and hopefully don't have to worry about rent with the eviction clause in this bill. They would love to see $2,000 checks. And it's interesting that Donald Trump, a Republican president, and Nancy Pelosi, a Democrat running Congress, have in a sense, band together to get behind these $2,000 stimulus checks. Why is Trump's Republican base, which has normally done anything he wants and been loath to criticize him, stopping this, holding up these $2,000 checks?
This is really a perfect illustration about the dynamics of the Republican Party right now. And if you're looking forward outside of Washington in terms of where the ideological policy debate is headed and the direction that it's moving toward for 2022, and yes, even 2024, it's about government spending. When you have a $27 trillion national debt, this is a conversation that I hear frequently amongst Republican lawmakers. More suburban Republicans are arguing that these types of stimulus checks are needed now. More moderate-leaning Republicans toward more of the center are arguing that more stimulus, as has been advocated by Fed Chairman Jay Powell, are needed now. But then there is that other conservative wing of the party who are saying that quite frankly, policymakers can't afford to put taxpayers on the hook for that type of debate. In terms of where things move forward, if you're President-elect Joe Biden, if you're trying to pick off Republican votes in the first 100 days for another round of stimulus and trying to garner the support of Senators Mitt Romney, Susan Collins, and other Republicans who have shown that they have a willingness to negotiate with Democrats, you now have an opportunity, if you're the Biden administration, to say, look, even former President Donald Trump was advocating for more stimulus in the final days of his presidency.
Well, you know, Kevin, I want to bring up back to what Matt said about Larry Summers. I mean, because that really created a whole Twitter storm. But his concerns were that family incomes are not down. He's concerned, Larry Summers that is, about an overheating of the economy. And I think this speaks to the stimulus package, not a stimulus, the relief package that Congress has just written up. Does it really hit the targeted audiences that it needs to? We talked about the K-shaped recovery. There are a lot of people who haven't even felt really the impact, the economic impact of COVID. There are those who feel it disproportionately. So is this a package that actually gets to those people and those small businesses that need it the most?
Carol, that's such a great point. And when I talk to Republicans and Democrats, what they've told me in the last couple of weeks is that they've really tried to take a more targeted approach in terms of the finances that are going to Main Street and small businesses. And this was one of the criticisms that the previous round of economic relief had garnered, was that there wasn't enough direct access to some of the relief for small and medium-sized companies, and that there was too much confusion. But I got to be candid here. In terms of the ideological debate that's going to happen in the next 2 years here in Washington, D.C., look no further than how the funds for the Federal Reserve and how that was debated in the final days of negotiating this relief. So you've got various different contingencies now that are all coming at this from different perspectives. The question for a President-elect Biden in terms of whether or not he can garner another economic relief package in his first 100 days will be whether or not he can pick apart enough Republicans to get support in the Senate. And candidly, Carol, we just don't have that clarity.
Right.
We won't know until January 5th, until Georgia, just how many Republicans he's going to be able to need.
Kevin, I got to ask about the social media issue. Donald Trump and some Republicans want to strip these, giant social media platforms of some protections, and Democrats seem to be fighting that. Why would Democrats want to protect these huge corporations that some would say helped Republicans win the last election?
Well, look, I think, quite honestly, I think both Republicans and Democrats have been arguing for the past several years for there to be additional regulations placed on Silicon Valley, albeit, as you just alluded to, they're coming at it from different perspectives. You've got Democrats, including Senators Elizabeth Warren and other progressives, who are arguing that these big tech companies have become much too big. And then you've got Republicans, led by the likes of Senator Marsha Blackburn and Tom Cotton, who have been arguing that Section 230 is outdated at best and needs to be reworked at least. And so the current president has been incredibly vocal about his disdain for Section 230. But either way, this is a much different Washington regulatory landscape, and honestly a much different regulatory forecast in the next couple of years than what Silicon Valley had really existed in prior to 2016. This is still the post-2016 climate, and I think that if you look back and look forward, 2016 was a clear delineation point in terms of the regulatory forecast for big tech companies.
Times are
but
certainly
fitting
changing.
that in the global issue is also going to be interesting.
Hey, Kevin, just got about 60 seconds here.
Yeah.
So that $2,000, can we expect any movement before a Biden administration, or is that kind of a moot issue at this point?
You know, I think that the checks that had originally been offered to go out, that they will be going out and as early as the end of this week and early next week. The administration and the government bureaucracies already have a path forward for how to disseminate those checks based upon the previous go around. But the clock has simply run out in terms of additional stimulus, so we'll have to wait and see.
All right, going to leave it on that note. Kevin Cirilli, Bloomberg News,
Thank you,
Chief
Carol.
Washington Correspondent at Bloomberg Radio and Bloomberg TV, host of Bloomberg Sound On 99.1 in Washington, D.C. I mean, TikTok, Matt, I mean, we have been talking about this second round of a relief package since this summer. Good to see something and some movement, but it does sound like many think we still don't have enough.
Yeah, that's right, and maybe a little bit too late for some because these unemployment checks come weekly, and this week, unless state and local authorities can figure out how to do it, may have been missed out for millions of Americans. Coming up later in this hour, Kit Jukes, SocGen's chief FX strategist, joins us. A great day to talk about an outlook for the greenback in 2021. Consensus says the dollar will continue to fall. That's great for U.S. exports, but it's a problem, of course, for us here in Europe in terms of both selling things and trying to get inflation on the rise. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump has signed a bill containing $900 billion in pandemic relief, backing down from demands that lawmakers change the bill before he signs it. The legislation includes $1.4 trillion in government spending to fund federal agencies through the end of the fiscal year in September. The government had been operating on temporary spending authority that expires after the end of today. European Union countries have begun vaccinating against COVID-19 as members of the 27-nation bloc struggle with a rising death toll from the virus. The coordinated rollout is getting underway less than a week after the EU cleared a shot developed by Pfizer and BioNTech. It will take months to inoculate enough people to have an impact on the spread of the disease. And now that federal officials have identified the man believed to be behind Nashville's Christmas Day bombing, they have turned to the task of figuring out the motive behind the explosion. The blast injured 3 people and severely damaged dozens of downtown buildings. Suspected bomber, 63-year-old Anthony Warner, was killed in the explosion. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
tomé como una terapia. Realmente logró la contención que yo necesitaba en ese momento.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
I understand he wants to be remembered for advocating for big checks, but the danger is he'll be remembered for chaos and misery and erratic behavior if he allows this to expire. So I think the best thing to do, as I say, is sign this and then make the case for subsequent legislation.
And that was Senator Pat Toomey, Republican, of course, from the state of Pennsylvania, speaking over the weekend on Fox News Sunday. And as we know, President Trump did sign that pandemic relief bill. He did that last night. As a result, we're seeing risk trade on really around the world. Particularly, we're seeing it play out in the European markets. We're also seeing it play out when it comes to U.S. equity futures. So you can see S&P 500 futures just up about 2/3 of 1 percentage point. Taking a look at the euro cross against the dollar, you can see a little bit movement, but call it relatively flat. That 10-year note with a yield of 95. And Bitcoin, which we're going to talk about a little bit later on. Got to keep an eye on it because last week it was record after record after record. And again, you see Bitcoin up another 10%. So continuing to move.
Do you remember, Carol?
I do. And you bought Bitcoin to buy a Christmas tree. Didn't you?
Now, I bought Bitcoins to live on for a couple of weeks. I spent nothing but Bitcoin for 2 weeks back in 2012. I started out buying them for around 800. Then I went and bought some for 600. I remember Joe Weisenthal was making fun of me a few months later when they dropped to 235. And boy, do I wish I had loaded up the truck. Yeah.
Where are those Bitcoin now, Mike?
Yeah.
I'm just wondering where they are, Matt. Okay.
Well, there. To be honest with you, I left a couple in a wallet. To which I forgot the password. So I think 3.4 Bitcoin I've got sitting in a wallet that I will never be able to get access to. Yeah. A lot of people have worse stories. Satoshi has like 1.1 million, but you know, that's a very nice luxury car if I could get that wallet open. But I can't. I've been trying for years. All right. In any case, we will continue to talk about Bitcoin throughout the program. Right now, I want to get over to Jason Brown, Alexis Investment Partners President. And Jason, I think the bigger story right now is the stimulus that President Trump signed, the budget that is going to keep the government open, unemployment benefits will be extended, eviction protections will be extended. Granted, a little bit late for some. Millions are going to have trouble this week. But How important is that, and do you think the U.S. needs more?
So I think all of the stimulus up to this point, including this most recent stimulus, was really about building a bridge to prevent unnecessary foreclosures, unnecessary personal bankruptcies, unnecessary business closures. And I think the key distinction between the stimulus in the first round and what we're experiencing now is at least we can see a road ahead to how much longer we're going to have, shutdowns, how much further this is likely to go on. Now, we don't know for sure until obviously we get through, the full vaccination process and really get to see, what reopening looks like. And I think that's going to determine pretty largely, what we're going to need going forward. But I think because we've been successful, at least for the most part, at allowing people to save money, allowing people to not have their credit deeply impaired, things of this nature, we have set up for some real opportunity for just the reopening itself to provide tremendous additional stimulus in terms of that potential for the V-shaped recovery we've seen in the markets to be reflected in the broader economy. So I think that, coupled with the fact that a lot of the jobs that have been lost have been in sort of less skilled areas, so that people being out of work for this long doesn't create the level of atrophy that you see, oftentimes in downturns, really does set the stage that it's really unknown what we're going to need going forward. I think
Jason, I want to jump in. Jason, let me jump in for a second, because you said that there's a point where the economy kind of catches up with what we're seeing in the financial markets. And we know, look at the S&P up 15%. Look at the NASDAQ up 43%. Small caps are up about 20% this year. Could it be, though, the reverse, where actually the market all of a sudden realizes, wait a minute, the economy, we're not going to see that growth come back so quickly, and we are way ahead of ourselves in terms of those publicly held companies? Is it that we maybe see that, where the market at some point is going to have to see some kind of correction or pullback because the economy and the economic growth is going to take a lot longer than everyone anticipated?
So, my view is obviously much more on how to manage the investments through this window of time. And what I would say is, overall, has the market maybe felt like it's been ahead of the economy? I would say potentially so. I mean, obviously, all the businesses that are out there and all the individuals who've been able to either, for the individual level, refinance your mortgages, for businesses, get access to credit at very low rates. Eventually, they're going to have to pay those and service the debt on these items, but their service is much lower. So, the potential for when we get back to prior levels of economic activity, for there to be, not necessarily a huge hit to margins, for example, for consumers to unleash some of that pent-up demand, I think is pretty powerful. And I don't necessarily think the market has done a poor job of kind of helping us look forward into the future. If we do keep running up at the pace that we've been going, I think then we run that risk that as stimulus comes off, maybe that'll become a problem. And I think there's going to probably be some turbulence early next year, just as we kind of digest everything that's going on, both politically and of course, just the gains that we've made.
I mean, Carol mentioned the big run-up in benchmark assets. I look at something, Jason, like Airbnb. It was worth $30 billion, and then we have a global pandemic that kills almost 2 million people, stops travel around the world, stops tourism in its tracks, and all of a sudden Airbnb is worth $90 billion, 3 times as much. It makes no sense to me, and I look at a PE on the S&P 500 of 30. How is it possible that these stocks are worth 30 times future earnings? I just can't wrap my head around it, no matter how much money we print and pass out.
Yeah, I see these as kind of two different issues. So I definitely think what's been going on in the IPO market with SPACs and all these other different things, there's definitely some speculative excess out there. Too many people are learning that lesson that we all pay for over time, which is that stimulus alone and just money, too much money and not enough alternatives in terms of fixed income yields and so forth, means that stocks don't go down, and they bet in sort of the most speculative areas. That is a problem. It's one that I pay attention to and so forth. I think on the other side, what we have to remember, for example, 2009 market meltdown, you had that initial surge off the bottom, and it takes a while for the earnings to catch up. So, we still have seen, obviously the lockdowns continuing in the economy and so forth. These earnings are still very depressed, obviously, with everything that's been going on.
Right.
As we recover out of that, the earnings are going to probably accelerate faster than the market. At least that's what I'm anticipating. So do I think the easy money's been made? Absolutely. Do I think stocks are necessarily as overpriced as they appear on a broad level?
Got it.
Maybe not.
Jason, we're definitely going to be watching those earnings expectations. Jason Brown, thank you so much. He is over at Alexis Investment Partners. He is president of that. And certainly we're going to be watching earnings projections as we get into the new year and see whether or not they play catch up with the valuations in the market. Coming up later on, Kit Jukes, Societe Generale Chief FX Strategist. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
In New York, Tom, John, and Lisa are all out on a well-deserved, well-earned vacation.
Yes.
And we are happy, more than happy, to fill in for them. Carol, a lot going on today, a lot going on to kick off the week. It seems like we've wrapped up one more issue.
Yeah, Brexit. Oh my God, finally. Although, as I was reading in this morning, Matt, as you know as well, that there are still some lingering issues. But let's get to Bloomberg's Maria Tadeo, get a quick check on what we know at this point and what's still to come. And this on a day where there's optimism about the pandemic relief program. Certainly we're seeing that play out around the world, but some optimism over Brexit. Maria, so where are we? What do investors need to know at this point?
Look, I think fundamentally what you need to take away from this is that there is a deal. This is something that we weren't taking for granted a week ago. It's no quotas, no tariffs, and of course it does avoid that cliff edge of a WTO term transition that would have been very abrupt for businesses on both sides of the channel in just 2 days' time. So clearly that's been avoided and there's been relief in the market. But what I would say, and the more you look at this deal in detail and the more you speak to everyone around it, there are many issues that still are pending to some extent. When you look at the fish, which was such a political battle cry for the prime minister, this is something that every 5 years is going to have to be renegotiated. When you look at financial services, which are so key for the city, at this point, that equivalence is not clear either. When you look at the level playing field, which is so key for the European Union, they've made it clear that in the future, there could be tariffs, there could be arbitration. So what is funny and ironic to some extent is that you do have a deal to leave on a good basis, but it does seem that this is going to be an ongoing story for many years to come. These two are probably going to be stuck in a very long negotiation going forward.
Yeah, absolutely. I mean, for those in America who aren't aware, this whole thing got snagged on fishing rights, which about 400 people work in the fishing industry overall in Europe. It's like a $10 million industry, and that's what held back everything pretty much. I mean, services, you mentioned the financial industry, nothing's been solved there, and services are obviously 80% of the economy. That hasn't been dealt with either. I want to ask you about something else, though, Maria. I spoke with Daniel Lacaille from Tresis this morning about how the European Union, how well the European Union would divvy up the rescue package. And I was thinking also about how quickly the European Union can get these vaccinations out. Isn't there a lot of skepticism that they're going to be able to do either one of those things in a very good manner?
Yeah, and Matt, not just in a good manner, but in very quickly speed. You know, we're looking at 6 months down the line where you would hope there would be mass vaccination at that point, but also to see that recovery fund, the 750 billion euros being paid out to countries that really need this to protect and rebuild their economies. When you look to the vaccine, what I can tell you, Matt, is that especially here in Brussels, there is a lot of anxiety, I would say, to get this going quickly and get it going much quicker than it's been done so far. Let's remember the United States and the United Kingdom, they were the first to vaccinate. Even though the Pfizer-BioNTech vaccine was made here in Europe, that was a loss for the European regulators. So you do get a sense from officials that they want to get it back up and running, and they want to get it done quickly. When you look at the recovery fund and rebuilding the European economy, that I can tell you is the #1 priority here in Brussels. It's not Brexit. This they want to put in the past. They want to look to the future, how to rebuild the economy and how to do it better. So again, you know, it's what to do with that money and what to do with that stimulus. If you're a country that's been badly hurt by coronavirus, like in Italy or Spain, of course you want to make good use of that money, but that remains to be seen, and just the speed of those transfers will be key.
All right, Maria, thanks very much for joining us. Maria Tadeo, they're on the ground covering everything for us as usual in Brussels. She doesn't stop. She's a 24/7, 365-day-a-year news hound. So great to talk a little bit with Maria about that. Let's get over to Kit Jukes right now from SocGen, Chief FX Strategist. And Kit, let me put a question to you that Maria and I have been discussing today. I talked with Daniel Lacaille about, as I mentioned. How confident are you that the EU is going to be able to efficiently and quickly hand out the stimulus money from its rescue package as needed?
I'm confident that they'll get it done. I'm absolutely confident that there'll be glitches along the way, because that's how Europe works. But I'm still confident that we've passed a turn in the road, if you like, where fiscal policy, after being really hardly active for the last decade, is finally coming to the party in a meaningful fashion. And I think that for me, that's the important thing. You know, we're not going to do it as quickly as someone wanted. It won't be, you know, there'll be glitches along the way, but it's happening. And for the last 10 years, the ECB has been the only game in town, and this money is going to get spent, and that is really important.
So, Kit, I guess when do we, I don't know, I keep thinking of the financial crisis and that long protracted recovery, right, which actually was ultimately really good for many different asset classes. But how do you see, is it once again, we heard Fed Chief Jay Powell kind of talk about the possibility for kind of a long sustainable recovery coming out of this era as well. How do you see it? Do you feel like you've got that visibility yet?
Well, I mean, my instinct is, and I'll hot stress instinct, that everything about the recovery from the financial crisis, and although they got panned for some of for some bits of it, I thought that this time is different, and was a brilliant look, at the time in terms of how a financial crisis was going to leave us with really serious scarring, with a financial system that didn't help the recovery properly in some places, and it was particularly true in Europe. I think the recovery from this, it seems to me, is that this has been a horrible year, but it's still only a 10-month crisis, and in all likelihood, I think once we get enough people vaccinated, we will get what people will say afterwards is a very V-shaped economic recovery. I don't think there's a lot of long-term scarring that gets left behind as a result of this pandemic. So you can put some things in place that are better. You can do well, but I think this is going to be it's going to be a quicker return to where we were before the crisis this time than after 2009, for sure.
Well, then, Kit, is Larry Summers, former U.S. Treasury Secretary, who got a lot of heat on social media over the weekend, saying that maybe we don't need these $2,000 stimulus checks. And he was really thinking about it's got to be really targeted relief going to the people who ultimately really need it. His concern is we're pumping a lot of stimulus into the economy at this point. Some argue, listen, let's overdo it. Let's make sure everybody's getting what they need. His point is there are people who don't need it who are getting it, and that could lead to an overheated economy. Do you worry at all about that?
I don't worry in the first instance. I think in the first instance it's true. You've got a lot of people who need help now in terms of replacing salaries who don't have any money, and we don't have time, I think, at a logistical level to go and find out exactly who those people are and do it right. So that's the decision that's been taken in a bunch of countries. It is true, I mean, it's true on the other side, that an enormous amount of the money that's been handed out in this crisis has gone to people who just can't spend it because we're all locked down in places where we can't do things. I cannot go on a holiday to celebrate having a handout of some kind. So there's a lot of pent-up demand that when we get these vaccines in is going to kick in automatically. So in 3 months' time, you'll find that of the money handed out this time in the U.S., quite a lot of that's going to have been saved because people can't do that much else with it. Now, again, that does mean that when we come out of the other side of this, so when we have vaccines to a significant number of the population, and we can all go to restaurants, bars, and holidays, we're going to go really for it, and that's why I think we get such a V-shaped recovery coming out. Now, how will we feel at the end of that about Jay Powell's commitment to keep rates so low for such a long time? How will we feel about tax adjustments that need to be made to kind of balance things down the road? Yeah, those, if you like, those are good problems for policymakers to have down the road. But they're still going to be helped by the fact that we've got a lot of disinflationary pressures here holding at least inflation under control.
When you talk about overheating economy, I have this mental image of Mario Draghi chuckling, or I think of Ben Bernanke on 60 Minutes back in the day when he said, inflation's a problem we can deal with. Don't worry about that. It's disinflation that's the issue. What do you think? Investors, on the other hand, Kit, do seem to be gearing up for the possibility of inflation. I mean, gold isn't running away. It's at 1,900. But Bitcoin at 28,000 is partly kind of the Reddit cult following and the inflow from these big famous money managers. But a lot of it is because people think printing presses are going to start running out of control, and this is a good hedge against inflation on fiat currencies. What do you think?
Part of it is, look, I don't know if it's a hedge against inflation as much as a hedge against asset prices being generally out of control as a result of such easy policy that, if we come out of this crisis, if you like, with asset prices, and you're talking about PE levels, but PE levels too high and bond yields too low, then the one thing you can bet in the next cycle is it's really hard for the Fed to have a rate cycle that doesn't have a lower peak level of rates than the current one, and that we'll continue that pattern, and that in the same process of that, companies then are still being encouraged to borrow too much money and raise themselves, fund themselves with debt rather than with equity. The Fed's frightened of the equity market going down, so it's letting it drop. And so that's where you get this loss of confidence in fiat money, if you like, and people looking for other assets, and gold is one of those. And Bitcoin has been a trendy one of those, for want of a description, wherever it goes in the long run. I think that I do think that there is a question that we need to, ask ourselves, or at least the policy makers need to ask themselves and say, what if the problem is not consumer price inflation until we get through all the things that have held inflation down for the last 20, 30 years?
Right.
What if the problem is we're just taking the debt cycle further by having real interest rates that are too low? And how do you get out of that if we're so sensitive whenever they go up even a tiny bit?
Well, these are things certainly we're all going to be talking about for some time. Kit, always good to check in with you. Kit Jukes from SocGen joining us on the phone on this Monday. Well, coming up next, everybody, we're going to be checking in with Kathy Jones from Charles Schwab, get a check on the markets, her thoughts on this environment as well. I'm Carol Masser along with Matthew Miller. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Trump has signed a bill containing $900 billion in pandemic relief, backing down from demands that lawmakers change the bill before he signs it. The legislation includes $1.4 trillion in government spending to fund federal agencies through the end of the fiscal year in September. The government had been operating on temporary spending authority that expires after the end of today. Germany's confirmed death toll in the coronavirus pandemic has topped 30,000. The number of confirmed COVID-19 cases jumped by about 11,000 in the past 24 hours to 1.65 million. Germany's death toll was relatively low in the first phase of the pandemic, but the country has seen hundreds of deaths per day in recent weeks. A shutdown that includes the closure of schools and most shops is scheduled to remain in place until January the 10th and will likely be extended. Indonesia is banning all foreigners from visiting the country on concern over the spread of a new variant of the coronavirus. The restriction will last for 2 weeks beginning on January the 1st. Some high-level officials will be given exceptions. And the two Georgia runoffs that will decide control of the U.S. Senate begin their final stretch this week. President Trump heads back to Georgia to appear with the two incumbent Republican senators, David Perdue and Kelly Loeffler, on the eve of their January 5th runoffs. The contests pit Democratic candidate Raphael Warnock against Loeffler and Perdue against Democrat Jon Ossoff, after none of the candidates managed more than 50% of the vote in November. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Its time is coming. I still don't think it's so much Bitcoin per se, but I think the big change, if it happens, will be with the central banks coming up with a blockchain currency. I think that's going to be the big news.
Yes, indeed. Robert Albertson there of Piper Sandler. He's their chief financial strategist, talking about Bitcoin, which is really turning out to be one of the big investment stories of 2020. Having said that, we did see Bitcoin move up again in today's trade, but let's walk you through the markets on this Monday after the long holiday weekend. And you can see certainly risk trade on some support, certainly when it comes to the equity trade, up about 0.7%, 25 points higher on S&P 500 futures, 37.20. You can see the euro just up a hair there as well. 10-year yield up to actually 0.95 there on the yield. And Bitcoin, let's talk about Bitcoin because it hit several records last week. And again, 10% higher today, up above $27,000, Matt. I mean, that is remarkable.
Yeah, it's absolutely unbelievable. I mean, the peaks and troughs are amazing. The volatility is difficult for so many to stomach, but the peaks keep getting higher and higher. Mike McGlone, Bloomberg Intelligence commodity strategist, joins us to talk about Bitcoin. And, you know, Mike, one of the most interesting things to me since I started covering this in 2012, and I've talked to government officials about this as well as, you know, Bitcoin legends, is it a currency or a commodity? You're a commodity strategist on the Bloomberg, it's XBT currency. What do you think?
I appreciate that question, Matt, because I think it's really more of a collectible, more like gold. You don't want to really, you can spend it, but you shouldn't really want to spend Bitcoin because the supply is declining and the demand's picking up versus dollars. You know, we know they're printing more of them versus every fiat currency. So to me, that's how Bitcoin has the advantage of appreciating in value. But I appreciate you starting out with volatility because the significance of Bitcoin, if you measure on an annual basis, basically this year, its volatility versus gold or the stock market, it's lowest ever. So it has sounder footings going into 2021 than it has at any time in the past.
Well, so Mike, you know, you and I have talked about this too over the past week. You know, when you take a look at that Bitcoin chart and when you say it's a collectible, okay, I get it because it's basic supply and demand there. But again, I go back to like 2017 when we saw a tremendous run up. I think it's important to kind of go back there once again that, you know, what's different about the trend here that we're seeing? Is it that there's more institutional investor money going into it? What is it that's different about the run up?
It's really shifted. I think that's a key point. Institutions are coming into space, but the key difference is it's gone from the land of cyberpunks and more techno geeks into the mainstream. And obviously a big difference is the volatility, but 2017 is significant because it was the last time we cut supply. In 2017, supply was running about 1,800 new coins a day. Now, for 2021, it's 900 new coins a day. So for simple economics, as long as demand is as much or higher, price must go higher. So that was a bit of an excessive extreme. But I think what we're seeing now is with institutions coming in, dips will be less extreme and more shallow, and the price should continue to appreciate. So I look at 50,000 as kind of a first target resistance, but it's barely a double this level. And the years of having the double is very, very minor. For instance, 2017, the market went up 15 times.
Yeah, it's so interesting. I mean, there was a time when, you know, it was amazing. Somebody bought a pizza for 10,000 Bitcoin, and that was considered a milestone. Then I remember when guys and gals were buying Lamborghinis or Ferraris with it back in 2012 when it was worth $1,000. Now you can use it on PayPal, which I think is a huge milestone as well. And you've got the biggest names. I mean, Paul Tudor Jones is one of the biggest legends in the investment world in history, and he's behind this thing. Is the next dip then considered a buying opportunity, Mike? And does that happen right before the next halving, so to speak?
Yeah, so the next halving is not till 2024, and my projections show annual volatility in Bitcoin will be the same as gold by then. So that's a long time away. But I think it's important to mention, you mentioned Paul Tudor Jones, a lot of people understand the reputation risks are against the naysayers now. If you say you don't like it and you don't get your clients into it and you're wrong, you're going to look pretty bad. So I see it as, I don't see what it's going to take to go down. I think 20,000 is now the key support. And a normal year, normal halving, it can easily get to 100,000. So the key question is, what's going to trip it up? Now, people talk about regulation. You can't really regulate Bitcoin too much because it's independent and it's the largest network in the world. But you can regulate things that are someone else's liability or project, like XRP or Ethereum or things like that. That's where Bitcoin is completely unique.
And I was just going to ask that. How do you differentiate it from all of the runners-up, all of the wannabes? Is Bitcoin the one? You know, for the investor out there, Mike, who is my age, or there are even people older than me who want to get into this, how do you navigate this massive world of coins? There's just so much out there. Is it best to go plain vanilla Bitcoin right down the middle?
Yes, and I think that's a conversation that came up over the holidays. I show my families, I just show them the PayPal, like you mentioned earlier, Matt. And PayPal's easy, it's in and out. You can buy $100 of Bitcoin, no problem. The significance is a lot of millennials get it now. Is there's things called savings accounts, crypto savings accounts. So you can put your Bitcoin in a savings account. You earn 6 to 7 to 8% interest. And I like to say, well, 10 years from now, that means instead of having 1 Bitcoin, you have 2 Bitcoin, obviously pay some tax on it. But that, to me, money has to flow that way until or unless it fails. And right now, those crypto savings aren't failing, and the millennials get it versus they're kind of turned off by low bond yields and high stock market prices.
Right, exactly. And as long as there's cheap money, I mean, they're going to be, investors are going to be seeking out my different types of assets, which is why it helps explain, some of the run-up that we've seen in Bitcoin. With institutional money getting more and more involved in it, Mike, do we need to see other kinds of digital currencies out there to meet the demand, ultimately?
I think the key differentiation is Bitcoin is a digital form of gold, and everything else kind of represents decentralized finance, and DEX is decentralized exchanges. Like Ethereum is a platform, so it's a completely different bet, or I should say investment. Bitcoin is more like gold and land in Ohio, and maybe to some extent income-producing stock market. But my fear is this kind of thing is if you're not in it 10 years from now, there's going to be a major differentiation between people who own land in Bitcoin and gold and people who don't, because the value of that piece of paper, that fiat currency, is definitely not increasing.
Yeah, the conversation has definitely, though, progressed over the last couple of years. All right, Bloomberg Intelligence's Mike McGlone joining us on the phone here. Really smart conversation. You've got to read everything he does at Bloomberg.com or on the Bloomberg, because he really is just hitting all those key points, Matt. I mean, no doubt about it. And I do think the conversation when you did a story several years ago, it's changed dramatically.
Yeah, absolutely. It has become something that was really niche.
Yeah.
I mean, when I was looking for groceries, I could only find one place in Greenpoint, Brooklyn, and to a Manhattan kid like myself, that might as well be Timbuktu. I went all the way out there, though, and did buy my groceries for the week. Now, I'm sure I could order them online and have them delivered. Love that Mike, by the way, mentions land in Ohio. Land in Ohio.
Of course you do.
That's a great tip.
All right, Matt, sit tight for a second.
Coming up,
Kathy Jones of Charles Schwab, Chief Financial Fixed Income Strategist. She's going to join us, talk about the fixed income market right here on
debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Central banks are showing no sign that they want to take their foot off the gas.
We still have momentum, but we are losing momentum at a critical time.
We're looking for a reboot and a restart and a recover, and I think that's really the theme for next year.
The biggest stimulus that's going to come is the vaccine.
The post-vaccine rebound is going to be incredibly V-shaped and quick.
It will be V-shaped for some. It may not be V-shaped for others. Next year is going to be a year of two halves.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What an all-star cast of investors and economists. Unfortunately, the stars of this program, Tom Keene, John Farrow, and Lisa Armstrong are off, or fortunate for them, I suppose. Carol Master and I here to keep you company on this Monday morning. Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. I love John riding there at the end, Carol, with his Christmas cap, with his Santa Claus cap on.
That's all that he could do.
Yeah, I think though, the most important comment is, and we're hearing a lot today about the V-shaped recovery.
Right.
It's not going to be a V-shaped recovery for everybody.
No.
Some people are going to see things bounce right back. For some people, nothing ever changed. But for some people, there's going to be so much change, a short, sharp shock, as Michelle Sharp would say, that just hits so hard it leaves a big scar.
Well, listen, we've talked about this over the last few months. You know, I remember the statistics that came out that said that most Americans, a big majority of Americans, didn't even have a few $100s if a big bill or, you know, that came up at some point. So it's just a reminder of how on the edge so many Americans, unfortunately, are living. It reminds us of the inequities, the disparities that we're seeing in our economy. And so we've talked about the K-shaped recovery, where so many have not felt necessarily the economic impact of COVID, but there are so many that have. We've talked about the fiscal cliff that so many are facing at the end of this year, whether they're going to be evicted, whether they can't provide food for their families. So these stimulus checks are crucial to so many Americans. Having said that, we did finally get the president signing off on that bill last night, and so that has provided some optimism, certainly in the trade today. So let's walk you through what we're seeing. S&P 500 futures pretty much staying at this level, as you can see, 37.21, so up about 26 points, 122 on that euro 10-year with a yield of 0.96. Bitcoin, again, we just talked about it with Mike McClone, one of the big stories of 2020, again a story on this Monday, up about 11.5%, above $27,000. But again, Matt, that optimism all has to do with that stimulus and relief package.
Yeah, and it's interesting to see, I mean, you may not realize how powerful the U.S. stimulus is, but every time an issue like this arises, it affects global markets. We see a big rally here due to the package in Washington, and a lot of times what comes out of Washington, D.C. has a bigger effect on European stocks than what comes out of Brussels, certainly than what comes out of the Brexit debate. Kevin Cirilli, Bloomberg Chief Washington Correspondent, joins us now to talk about the bill that was signed. Kevin, it's a much smaller version of what many wanted months ago when this discussion first happened. And it does look like millions of people are still going to be hit because unemployment benefits will lapse for a lot, right?
Well, for some Republicans, it's too much money. For Democrats, it's not enough. But this was the compromise that the Problem Solvers Caucus was able to yield. And President Trump, although in the final days urging for there to be $2,000 stimulus checks, ultimately arriving at where the Republican Party is, which is this is the best that they could offer. In terms of spinning this forward, President-elect Joe Biden has said that this is just a down payment and that additional relief will be needed in his first 100 days in office. He's going to be carefully looking at the Georgia election runoff results on January 5th to see just how much Republican support he would need from centrist Republicans in the Senate in order to try to get additional relief passed.
Well, and I do wonder about the Georgia Senate runoffs, Kevin, depending on the outcome, but how crucial ultimately is that outcome going to determine whether or not we get another round of stimulus here or another round of relief?
Carol, you know this, I mean, it better than anyone in terms of just how every vote counts, especially on divisive issues. The Republican Party is very divided right now. And look no further than Larry Summers' op-ed on the Bloomberg terminal and what you have from President Trump, who wanted there to be additional funds. Larry Summers saying, no, not so fast. We have, Larry Kudlow, correction. Larry Kudlow saying on the Bloomberg terminal that additional funds would not be needed. You've got that divide right there on full display. So I bring that up because for the Georgia runoff, Senator Susan Collins and Mitt Romney, who have showed a willingness to work across the aisle on some of these divisive issues, are going to be the key votes. But just how many votes are going to ultimately be needed, that's what we're all waiting for to get some more clarity coming from the January 5th runoff election.
Kevin, you got to be quick, 20 seconds. The Republicans lost some clout, some momentum as a result of President Trump. Just quickly.
Well, look, I think that the Republicans would look at the House and they would say that they made significant gains, Carol, in terms of the dynamic of the House of Representatives. But no doubt, I mean, they lost the executive branch and we're still waiting for clarity in Georgia.
All right, you were quick. Thank you so much. Kevin, always with a smart update. Kevin Cirilli there in Washington. All right, so let's get to our next guest, Kathy Jones. She is Charles Schwab Chief Fixed Income Strategist. Got to take a look at the fixed income market because, of course, we're watching as more stimulus is pumped into the economy. What is the ultimate impact when it comes to fixed income? Kathy, great to have you here with Matt and myself. How do you see it, the stimulus package, and what it does ultimately for the economy overall, what it does for Americans, and what it does for the fixed income trade?
Well, it helps fill a gap that continues to be open. You know, when we hit this crisis, a huge gap, the output gap opened up. We've come about 2/3 of the way back. Still got 1/3 of the way to go, and that affects by and large, the lowest income folks, so the people who have the least cushion, and now they've just seen some of that cushion kind of taken away temporarily. But it also affects small business, it affects state and local governments, so we still have a ways to go. And I think that the fiscal aid is a good thing. It certainly is buoying markets. It raises optimism about the economy further out in 2021. And we're optimistic in terms of the second half of the year as well. And I think ultimately it pushes up bond yields. We've been hovering right below 1% here in 10-year Treasury yields. If we continue to see inflation expectations move up and signs of increased recovery, by the end of 2021, we could be close to the 1.5% area.
So we were talking earlier about the fact that bond yields are incredibly low, Kathy, near zero there, but negative everywhere else. And price earnings ratios are incredibly high. Certainly in the U.S., I just looked at the S&P, and we're at almost 30 times estimated earnings. How can investors expect to make any money even if we get further stimulus?
Yeah, it's going to be a challenging year, and I think Schwab, along with a lot of other places, are indicating that expected returns are going to be lower. The higher the price you pay, the lower the expected return over time. So I think you do have to have realistic expectations about where we're going. But it's not an environment where we just say, move to cash, because cash is going to pay nothing for at least a year or two, possibly longer. So the key is to be fairly selective in the fixed income market. What we're saying is keep the duration short so you're not exposed to a lot of increase in long-term rates, and move up in credit quality, whether it's investment-grade corporate bonds, municipal bonds, et cetera. There's still some yield to be had and the opportunity to compound those yields.
All right, so I'm looking at the piano behind. I know you've already played for surveillance, so I'm not going to ask you to play for Matt and me, but I do wonder if you were composing something and you had to describe, something for 2021, is it going to be more optimistic, but you got to be patient to get to that optimism, or is it going to be a bit somber this year?
I think it's going to start out on a more somber note. Markets aside, I think economically speaking, it's going to start out on a more somber note, but it's probably going to be more like a Beethoven symphony where you have highs and lows, crescendos and declines, because we're all looking right now at this optimistic scenario for the second half of the year, and we all know that things don't just glide in the direction that we want them to. So I'm expecting a fairly tumultuous year coming.
All right. We've certainly seen a lot of volatility, so just get ready, everybody, for a little bit more. Kathy, thank you so much. Happy New Year. Kathy Jones of Charles Schwab joining us here on Surveillance. Well, coming up, we're going to check in with Dr. Yvonne Macchianato of Stanford University, professor of global health and infectious diseases. Our latest check. What did I do wrong? Yes.
Well, I'm looking forward to that, because I think one of the most important questions is going to be how quickly can vaccines get rolled out? And you started there in the U.S. already, and the U.K. has started already. And the U.S. and the U.K., one of the big benefits of those two systems is the lack of bureaucracy. Things can move quickly. That's why you've got such successful startups, such a hot technology sector. Whereas here in Europe, there are benefits to living in Germany as well. Everybody has health care. It's very difficult to get unemployed here, but things move really slowly. There's still, we have to file paperwork, actual paper, in triplicate for everything we do. And that's the kind of thing that holds the rollout of something like this vaccine back. So my question is, when we talk to the good doctor, how quickly can we get these vaccines done? And what's going to happen if there are lags? If the U.S. gets vaccinated quite well and Germany is held back, I fly back to the great state of Ohio to celebrate Easter, right? What's going to happen if I start spreading it around there? So these are the issues that I really want to look into.
Listen, Matt, I feel like in this whole process, we've understood that you've got to be a little bit patient. It all takes time. In terms of the vaccine, we talked about just getting a vaccine. We talk about production, and we talk about rollout. I was talking to the head of infectious diseases at Northwell here in New York, a major healthcare system. It's where the first COVID case was here in the New York Metro. And what's interesting is he said, listen, you give a test, you've got to do it socially distanced, you've got to watch a patient for 15 to 30 minutes to make sure there's no reaction. So it's not so quick. The process is taking a longer time. And these are certainly issues we need to think about as we do see the vaccine rollout. We are going to check in with Dr. Yvonne Maldonado, Stanford University professor of global health and infectious diseases. See what she has to say about the latest on COVID-19. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump has signed a bill containing $900 billion in pandemic relief, backing down from demands that lawmakers change the bill before he sign it. The legislation includes $1.4 trillion in government spending to fund federal agencies through the end of the fiscal year in September. The government had been operating on temporary spending authority that expires after the end of the day. Now, the two Georgia runoffs that will decide control of the U.S. Senate begin their final stretch this week. President Trump heads back to Georgia to appear with the two incumbent Republican senators, David Perdue and Kelly Loeffler, on the eve of their January 5th runoffs. The contest hit Democratic candidate Raphael Warnock against Loeffler and Perdue against Democratic Jon Ossoff after none of the candidates managed more than 50% of the vote in November. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
If we can really get vaccines going in April, May, June, July, and August, by the time we get to the end of the summer, I think we can get to that goal that I'm talking about getting the overwhelming majority of the population vaccinated.
And that is, of course, the famous Dr. Fauci there talking about the possibility of getting vaccines rolled out. And he's saying hopefully by the end of the summer, we're going to be able to move about freely and maybe even mask free. Let's take a look at the markets this morning, because it's not just the vaccines that are having, I'd say, an optimistic effect. You had the Brexit deal on Christmas Eve as well, but most importantly for animal spirits and market sentiment, you had Donald Trump finally signing that rescue package and the budget bill. That is going to extend unemployment benefits, it's going to extend eviction protections, and it's going to pass out the kind of money. It's going to spike the punch just the way the market likes it, at least for now, with a couple of pints. The S&P futures are up 0.7%. You've got the euro stronger against the greenback as the dollar falls. Treasury yields are rising as investors feel safe enough to sell the perceived safety of U.S. debt, and NYMEX crude rising just 41 cents to 48.64 a barrel. Carol?
All right, Matt. But as you mentioned, that pandemic relief program signed by President Trump certainly giving support to the markets. Let's go to, though, our next guest and get an update on kind of where we are when it comes to COVID-19 and the virus. Dr. Yvonne Maldonado is with us, Stanford University professor of global health and infectious diseases and of epidemiology and also of population health. Dr. Maldonado, great to have you here with Matt and myself. So I think there's a little bit of a slowdown potentially of data because of the holiday weekend. But when you look at the virus headlines that are out there, over 4.4 million vaccines being distributed. But again, we continue to see cases rising in the United States and around the globe. What are the headlines that really stand out for you?
Well, I think the headlines that stand out are not unexpected, unfortunately, and that is the increases that you just mentioned. We did, unfortunately, expect to see a rise around the world, in particular what we're seeing in the United States, parts of Europe, Africa starting to see some increases is concerning, but this virus just won't stop. It's clear we're going to need this vaccine or vaccines to start to stem that tide. So those are the big ones. The other is the number of vaccines that are being distributed, and I think everyone can agree that these are great products, and everyone wants them as quickly as possible. And companies are doing the best they can to roll out in record time.
Right, logistics, distribution. Dr. Maldonado, one of the things that I do think, you know, as we heard from Dr. Fauci just coming into this segment, that he said he does expect if we get them out to people in April, May, June, July, and August, by the time we get to the end of the summer, maybe we get back to normal. The way the distribution is going and how logistics are working or not working in terms of getting out the vaccine, do you think that's a realistic timeline based on what you're seeing, even with your hospital and elsewhere?
Absolutely. I really think that the production, people I think are anxious and want it to go fast, but I do think we're moving at a decent pace. And based on the transmission characteristics of this virus, I do think that the summer could be a good time to really start seeing a slowdown. Not to say that we won't see one before then, but by the end of the summer, if things go as we see right now, we should be able to start seeing major reductions. We'll start to see herd immunity at levels that will hopefully really slow transmission, and we'll learn for sure whether the masking and distancing are going to be required over the coming year. or not. I suspect there will be some degree of distancing still required in masking, but the reductions may be coming, given that there will be more immunity in the population.
Dr. Maldonado, the biggest question I think that we have been hearing here in Europe over the last week or so is, what about mutations? I mean, viruses mutate all the time. I know that's kind of like their raison d'etre in a way. That's just what they do. But will the new UK mutation still be controllable with vaccines? Will this virus, is it likely that it mutates in a way that vaccines can no longer stop the spread?
So this is a tricky virus, and I think it really just speaks to the way organisms can really adapt to their surroundings. So somehow this virus really has adapted very well to humans. That's obviously the case with a pandemic-style adaptation. And so it appears the good news here is that the spike protein is so important to this virus attaching and replicating that it's a relatively simple way to develop immunity. You just need to have immunity, that one little piece of the virus. And perhaps it's our downfall as well, in that the virus will mutate because there's so much antibody to that the variants, the mutations that occur, will be able to get around that immunity. It's a possibility. We know that it's not more virulent. It may just be more likely to stick to human cells and be able to infect them. But the platforms, especially the Moderna and Pfizer platforms, they look like they're flexible enough to be able to adapt to mutations as they occur. So while that could be a concern in the future, the platforms themselves look like they can be manipulated relatively quickly to adapt to any changes that could be coming, although we don't have evidence of those yet affecting the vaccine. The companies are monitoring them, and these mRNA platforms are very, very easy to, relatively easy from vaccine standards, easy to manipulate, so that you could see immunity developed to any mutant variants that could come down the line.
All right, Doctor, thanks very much for your time this morning. Really appreciate it. I'm sure we'll want to get you back on for more on this in the very near future. Dr. Yvonne Maldonado there of Stanford University. She is a professor of global health and infectious disease and of epidemiology and population health. Some of the most, she's probably one of the most important dinner guests you could have right now if you were allowed to have a dinner guest. Right, Carol? I mean,
no, listen, this is
I don't know about you, but this is, it's driving me crazy. I like to have big dinners with a lot of people and a lot of wine, and this is just not happening, and it doesn't look like it's going to happen in the foreseeable future.
It's not going to. And I think even if we get the most of the population, like Dr. Fauci expects, to get vaccinated by the end of the summer or throughout the summer, we were having a conversation at home. It's just like, are you going to feel comfortable going to a big dinner party at Matt's house? Are you going to be comfortable going to a sports stadium and to be surrounded by people, especially when we don't know how long the immunity lasts with the vaccine? So there's still a lot that we don't know if we continue to have these variants too, Matt, which is, I think, a good thing that you talked to the doctor about. Like, there's still so much we don't know when it comes to COVID-19.
Yeah, absolutely. And I've had enough of these walks. All my friends want to go grab a flask and go on a brisk walk. Well, I'm tired of that. In any case, I guess something we have to deal with for now. Coming up, we're going to talk with Lindsay Piegza, Stifel chief economist. So get ready for some insight from Lindsay on the other side of this break.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
And this is Bloomberg Surveillance on this Monday, December 28th. Carol Master in New York, Matt Miller in Berlin, and we are definitely seeing some risk on trade here and some optimism, certainly because of the Brexit deal, but really largely because of President Trump late yesterday, signing that pandemic relief bill. And you can see some support there in S&P 500 futures, up about 0.7%. That's pretty much been the trade throughout the morning. You've got the euro 122, 10-year with a yield of 0.95. Watching that, certainly when it comes to more stimulus being pumped into the economy. New York crude right now just up a hair, Matt.
Yeah, it does look like risk sentiment is up this morning around the world after President Trump signed a bill containing $900 billion in pandemic relief. That's definitely what moved markets here, and that move also avoids a U.S. government shutdown. Former Treasury Secretary Larry Summers spoke earlier on Wall Street Week about a stimulus deal.
We're better off with stimulus than we are without stimulus. I don't think the $2,000 checks make much sense. The real issue is going to be sustaining this expansion. You think about it, the 908 stimulus bill probably would pay out $200 to $250 billion a month for the next 3 months. The level of compensation is running about $30 billion a month below what we would have expected it would. GDP is running about $70 billion a month below what we would have expected it would. So in a way that's quite unprecedented, we have stimulus already much more than filling out the hole. And given that lots of the hole is from the fact not that people don't want to spend, but that they can't spend because they can't take a flight or they can't go to a restaurant, I don't necessarily think that the priority should be on promoting consumer spending beyond where we are now. So I'm not even sure that I'm so enthusiastic about the $600 checks. And I think taking them to $2,000 would actually be a pretty serious mistake that would risk a temporary overheat. I would like to see more assistance to state and local governments. I would like to see more money put into testing, more money put into accelerating vaccines. But gosh, David, I think it would be a real mistake to be going to $2,000.
That was former U.S. Treasury Secretary Larry Summers speaking to David Weston on Wall Street Week, saying he thinks $2,000 is too much. And it's really interesting to hear Democrats coming out and say they don't think that Americans should get $2,000 stimulus checks. Lindsay Piegza, a Stifel chief economist, joins us now to talk a little bit more about this. Lindsay, Larry wrote Secretary Summers, I suppose, wrote an op-ed for Bloomberg explaining a little bit more. He said, of course, he thinks stimulus is necessary, more stimulus, but he used the old anti-minimum wage argument when it comes to stimulus checks, saying, hey, if we're going to say 2,000 is better than 600, why not do 5,000 or 10,000? What do you think?
Well, I think right now this represents a lot of frustration that we're seeing surrounding the stimulus bill. For many, the frustration stems from the fact that it's taken months to negotiate to get to this point, and it's seen as smaller in scope than many would like. There's others that argue they're pet projects or pet components in the legislation that really doesn't address the issues of the pandemic itself. Long-term health solution. Remember, this wasn't a market crisis, this was a health crisis. So in order to have a long-term sustainable pathway to recovery, we have to have a meaningful way to separate the healthy from the sick. So there really isn't much that the government can do long-term other than support finding a way to get that vaccine out to the American public and have widespread inoculation.
So, okay, so let me push a little bit further here, Lindsay, because, you know, Matt was mentioning Larry Summers did, you can check it out on the Bloomberg terminal, you know, did do an op-ed piece, you know, referring to that $2,000 stimulus check and the comments he made. And he said total employee compensation is now running only about $30 billion per month behind the pre-COVID baseline. He talks about the congressional stimulus from this bill will add about $150 billion a month to household income in order to replace all of this loss. So is he right? Is he right in that we're putting too much into the economy when you're saying it's a health problem, that unless we really do money that's targeted towards getting that, you know, dealt with and stopped, is he kind of right in what he's saying?
Well, there certainly is validity to his argument. When we look at replacing one's wages at 100%, or in some cases with these enhanced benefits above 100%, you actually create a disincentive for many of these workers to return to the marketplace. And we've heard a number of stories, particularly in the service sector, in the restaurant industry, actually, to be more specific, that they're having difficulty reconnecting with workers as they try to reopen in some capacity at 50% or doing delivery only. And they're having trouble finding workers to come back and actually fill those positions. And this isn't a political statement or a judgment in any means, but if you're paid X to work or X plus 20% to not work, most rational agents would choose the latter. So it certainly is creating some disconnect in the labor market.
And at the same time, I'm going to play devil's advocate here. There are millions of Americans, Matt and I have been talking about it, that are facing eviction, are facing that they can't put food on their table. So I don't know how we kind of make sure that we're doing the right thing. And I'm wondering how you kind of factor all of that into it.
Absolutely. We're talking about 10 million renting-based families that could be impacted by that eviction if it is not extended beyond what that fifth round stimulus package has at the end of January. So it's a very delicate balance. On the one hand, we want to make sure that we encourage people to participate in the labor market. On the other hand, we want to make sure that we support businesses and workers that have lost income, revenue, opportunities through no fault of their own, but by the government's own design. So it's a very delicate balance. But again, it doesn't come down to long-term sustainability via government funding or government support. It has to come from health solutions. And so right now, that's where the majority of our focus, that's where the majority of the funding should be driven, at least in my opinion.
Lindsay, what do you expect from a Biden administration? It's not going to be too many weeks now until President Biden gets into office. There's the possibility, depending on what happens in Georgia, that he even has control of the Congress and the Senate as well. So what are you expecting from the Democrats in 2021?
Well, we're going to assume a balance of power in Congress. We will assume that Republicans maintain control of the Senate. Of course, the House is led by the Democrats. And right there, that's going to remove a number of fringe agendas, from violent tax increases to Medicare for all, to the Green New Deal, aggressive changes in immigration or regulatory reform. Those are all off the table, at least for now. But of course, the president will still have the power to tip the needle in one direction. And we do expect him to focus on a sixth round relief package to come immediately. We also expect him to lessen some pressure on China, loosen the U.S. Stance on immigration, at least to a certain degree. So there are some moderate changes that we would expect on some of these big ticket issues that he would otherwise prefer to have sweeping reform, which again will be controlled by the fact that we have that balance of power, that presumed balance of power in Congress.
So gridlock is good, at least for markets. What do you think happens in terms of risk assets? I mean, we're living in an economy where you lend your money to the government for no return, and you invest in equities at a 30 price earnings ratio.
Well, the equity market seems to be elated by the fact that we did finally reach a deal, a fifth-round stimulus package. The equity market also seems to be getting a positive boost from Brexit negotiations, which appear also to have taken a positive step in the right direction. So right now, the equity market seems to be focused on everything but the fact that fundamentals in the economy appear to be losing momentum. And the fact that the U.S. economy...
Yeah, it's all animal spirits, right?
Absolutely. Right now, depending on the depth and duration of this second round resurgence and the subsequent policy measures that we put in place, we could see the first quarter dip back into negative territory. Yet you see very little, if any, concern priced in via the equity market.
Right. Gridlock, good, and euphoria, good for the markets, but not necessarily for humans. There was a great story on the Bloomberg just about that. Just quickly, Lindsay, I do think about the first Fed meeting of 2021, January 27th. We'll have a new administration in the White House. What do you think will be kind of the thing that Jay Powell has to do at that first meeting of the new year?
I think he's going to continue to walk this very delicate line of highlighting the improvement that we've seen in the economy, but continue to put pressure on the federal government, as we've seen him do many times, that really the Federal Reserve has passed that proverbial baton to the federal government to step up with any further relief or stimulus measures that are needed. So I do expect Powell to continue to, again, walk that delicate line, but keep the pressure on the new administration to continue to provide support.
Yeah, it's going to be an interesting new year, no doubt about it. Lindsay, thank you so much. Lindsay Piegza of Stifel joining us there from Chicago. So listen, Matt, I mean, the problems that, persist right now and that have been hanging over us for the last couple of months, yes, the pandemic relief program, provides some help here, but we're going to still have these problems, and that's going to hit the Biden administration head on when they come in.
Yeah, on the other hand, and I know we keep going back to Larry Summers' op-ed piece. You can get that by typing OPINGO on your Bloomberg. There is a lot about this recession that's very different from the 2008 recession. He makes the point that back then, consumers were putting everything on credit cards, deep in debt, nothing in their bank accounts, and then retail spending dried up. Now we're looking at a holiday season where retail spending actually bounced 3% compared to the same time last year. And in 2008, it dropped 3.5%. So some things are very different, especially, I think, the average bank account is a very different look this time than it was in 2008.
Very, very different. Corporate balance sheets are different, right? And certainly personal, individual bank accounts. We've seen the numbers of people, the savings numbers are up dramatically. And so it's a very, very different situation. As Larry Summers points out, and others have pointed out, that from some of the guests that we had earlier, it's people can't go out and spend money. You can't go to a restaurant. You can't go to a store. It's a very different environment. But as you mentioned, the retail numbers are definitely coming in better than everybody forecasted. And that's something we're going to talk about in the next block. Coming up, we're going to check in with Steve Sadov. He's former Saks CEO and MasterCard senior advisor. See what he is seeing specifically when it comes to this holiday season and this retail environment, what he sees for 2021. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump has signed a bill containing $900 billion in pandemic relief, backing down from demands that lawmakers change the bill before he signs it. The legislation includes $1.4 trillion in government spending to fund federal agencies through the end of the fiscal year in September. The government had been operating on temporary spending authority that expires after the end of today. Germany's confirmed death toll in the coronavirus pandemic has topped 30,000. The number of confirmed COVID-19 cases jumped by about 11,000 in the past 24 hours to 1.65 million. Germany's death toll was relatively low in the first phase of the pandemic, but the country has seen hundreds of deaths per day in recent weeks. A shutdown that includes the closure of schools and most shops is scheduled to remain in place until January the 10th and will likely be extended. Indonesia is banning all foreigners from visiting the country on concern over the spread of a new variant of the coronavirus. The restriction will last for 2 weeks, beginning on January the 1st. Some high-level officials will be given exceptions. And the two Georgia runoffs that will decide control of the U.S. Senate begin their final stretch this week. President Trump heads back to Georgia to appear with the two incumbent Republican senators, David Perdue and Kelly Loeffler, on the eve of their January 5th runoffs. The contests pit Democratic candidate Raphael Warnock against Loeffler and Perdue against Democrat Jon Ossoff. after none of the candidates managed more than 50% of the vote in November. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Is a time to strike when the iron is hot. And part of it, I think, it's not just a relief from the circumstances we're in. It's a sense that there's going to be a very positive market environment.
That was Bob Profusek, Jones Day Global Chair of M&A, talking to Bloomberg. Coming up on the open, Peter Cecchini, Alpha Omega Advisors CEO and founder, joins us to talk a little bit about M&A as well as a number of other things. So,
well, it's been a hot year, Matt. You know, if you think about it, whether it's IPOs, SPACs, I mean, and we've seen a fair amount of deal flow. So it's crazy in this year where we saw so much volatility in the markets, where we saw the economy take such a hit, and yet all of that performed kind of off the charts.
I'll tell you, to me, the interesting thing is I've been running the MA function a lot lately on the Bloomberg, and you can look what's going on between regions. So you've got deal count and volume of deals sort of getting back to where it has been, but obviously it's been a tough year. Average premium, on the other hand, continues to climb, and where you're really seeing that is Asia, Southeast Asia especially. That's where investors want to go because they've got the virus under control there, and that's the hot place, I think, to do big M&A deals, at least with big price tags right now. If you look at Asian deal making, the average premium is off the charts. Carol?
Right, and I think the expectation is you'll also see some distressed deal making going into 2021. All right, Matt, we're looking forward to you kicking off the trade on this Monday, so check out Matt Miller for the open in just a few minutes' time. Now, I do want to talk a little bit about, speaking of distress, we've certainly seen that play out when it comes to the retail sector. So someone who knows retail so well is Steve Sadov. He is former Saks CEO, MasterCard Senior Advisor. He joins us on this Monday. Steve, so great to have you here with us. This holiday season actually turning out to be okay.
Absolutely. I think it's been a healthy consumer environment. If you look at the MasterCard Spending Pulse numbers, which measures all of retail, not just the MasterCard numbers, it shows that from October 11th to December 24th, which is what we're looking at as the full season, the consumer grew 3% versus a year ago. And if you had asked me back in March whether or not there was a shot that you were going to see positive growth like that, I would have said, you're kidding. Those numbers are almost essentially in line with what we saw in 2019 in terms of growth. So it's a healthy consumer. It's very different than we saw before, much more digital.
Well, let's talk about that because it's interesting. You, Matt, and I were talking in the break, and we were talking about everybody's kind of all in on your home right now.
Yep. Absolutely. Home, you're nesting, you're not at work, you're fixing up your house. So anything related to home, furnishings, electronics, stay-at-home types of activities, grocery doing extremely well. Apparel not doing well, department stores. Within an apparel, which declined 19% during the holiday season, you see still strength in athleisure and some of the casual dressing. Nobody's going out to events, so they're not buying dresses and items like that. That'll come back in time, but you're having this gravitating towards the home, but you also have this digital environment. People aren't comfortable being in the stores. The malls are having a very difficult time. Apparel stores. What you're seeing is the big box retailers, which have been winning throughout this environment, the Home Depot, Lowe's, Targets, Walmarts, etc., doing extremely well. And that continued during the holiday season. But there's one other thing I think is fascinating. You see strength in the suburbs versus the cities. People aren't going into the offices. That the savings rate you talked about earlier going up, it's also people aren't spending on commuting. They're not eating in restaurants. That's leading you towards the dollars going towards items like the home and home improvement.
So, Steve, how does this, in terms of kind of some of the patterns we're seeing right now and the increase in online, how much of that stays with us post-pandemic in your view? Because we've constantly been talking about online kind of overtaking brick and mortar. We still have a long way to go when it comes to that. But I do think that there are people who never ordered, whether it was food or some other things online, all of a sudden did it for the first time. And they're like, this is pretty easy. So what changes dramatically, potentially, when it comes to retail post-pandemic?
I think we've probably seen 8 years of change in 8 months. You now have digital being about 20% of the total purchases. That means that 80% is still being done in a physical store. So we shouldn't be writing off stores because stores are still critically important. I think that a lot of the changes that we're seeing are here to stay. It's that the digitization of society, you're going to have working differently. People are going to have a mix of in their offices and at home. That means they're going to have to have fixing up their home on a continued basis. Restaurants are going to come back. Apparel will come back. But I think that more importantly, some of the societal changes that we've seen, the consumer, and it used to be more the Gen Z customer, now it's everybody concerned about brands and brand values, social justice issues, environmentally conscious, what the brands stand for, how the products are made, those kinds of changes, I think, are going to stick with us. I also think that the trend towards moving out of the cities, right now, suburban sales are much stronger than you're seeing in some of the urban areas. I think cities aren't going to die, that's for sure. You have enormous amount of the cultural aspects of the cities that are going to be vibrant. But I do think that some of these changes are going to be sticking with us.
So what kind of retailer do you not want to be, Steve, right now, when you look at what's going to come maybe in the next 2 to 4 years, let's say?
Well, the ones you didn't want to be were the financially distressed apparel retailers like the Neiman Marcus's, the J.C. Penney's, the Brooks Brothers, the J. Crews that already have gone bankrupt during the pandemic. I think that the inline apparel retailers in malls are still stressed because the malls aren't the place that consumers are shopping. They're shopping in outdoor strip malls, but indoor shopping malls are slower to recover. So I think that's going to be a difficult environment for some time to come. I think that broadly, restaurants are still having a very difficult time. I was pleased to see that the pandemic support bill got signed last night, but restaurants are in terrible condition. Now, you're going to see a resurgence in restaurants when once we're into the post-pandemic period, but you're also going to see a reset of rents. You're going to see real estate being very different. You look at vacancy rates of, let's say, in New York, of Manhattan, Soho, and Madison Avenue, 30-40% vacancy rates. Retail real estate prices will go down, and you're going to see a reset in all these categories.
We're already seeing that reset. Just drive down the avenues here in New York City, and you see a lot of those retail stores that have been shut down already. Steve, thank you so much. Have a great new year. Steve Sadev, he's former Saks CEO and MasterCard Senior Advisor, joining us on this Monday. Well, let's do a quick check on the markets. As you can see, the optimism continuing, pretty much been the trade throughout the morning. So we're still up about 28 points on the S&P 500 futures, so pointing to a higher open on this Monday. That 10-year, watching that after that massive relief pandemic program being signed by the president, 0.94 on that 10-year. Well, coming up, we're going to check in with Todd Magazine. He's Fitness's CEO. Going to talk about the fitness market. That industry saw a lot of changes in 2020. And also Matt Miller going to count you down to the open on this Monday. I'm Carol Masser, and this is Bloomberg.
新型にはなんと2万点以上前身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを一回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good Monday morning to our viewers worldwide. I'm Matt Miller. I'm in for John Farrow this week. The countdown to the Open starts right now. We begin with the big issue, bridging the gap in Washington. President Donald Trump signing the $900 billion bipartisan pandemic relief bill, ending months of fiscal stalemate in D.C. Lawmakers on both sides of the aisle criticizing the president following 11th hour, or really 13th hour, demands pushing for higher stimulus checks. Republicans urging compromise.
You don't get everything you want, even if you're the president of the United States. If it were just the freestanding government funding bill, I would almost certainly be voting against that. But I think the COVID relief measures are really, really important. Time's running out.
Democrats taking the president's call, though, for $2,000 stimulus checks to the House floor. Speaker Nancy Pelosi staging a roll call vote later today, putting pressure on GOP opposition, writing, quote, "Every Republican vote against this bill is a vote to deny the financial hardship that families face and to deny the American people the relief that they need." Bloomberg Chief Washington Correspondent Kevin Cirilli joins us now with the latest. And Kevin, I think, one of the most interesting pieces of this is how it plays into the Georgia runoffs. You've now got, or now it looks like, Republicans are against giving Americans more money. How's that going to affect the races in Georgia?
Well, look, I think that's the greatest unknown, and what really markets as well as leadership and Main Street is looking for in terms of clarity over the next 3 months, especially how that result from the Georgia runoff election will inform President-elect Joe Biden's ability to pass more fiscal relief in his first 100 days. But let's pull up what President Trump had to say about this package that he was able to sign into law. He says, quote, "I want far less wasteful spending and more money going to the American people in the form of $2,000 checks per adult and $600 per child. Much more money is coming. I will sign the omnibus and COVID package with a strong message that makes clear to Congress that wasteful items need to be removed." I do want to also point out that it's not entirely everyone on board with this. Take a look at what Larry Summers had to say in a Bloomberg opinion column. He said, quote, "There is no good economic argument for the $2,000 checks, a policy that was not even on the table until the president's random pronouncement last week." Now, based upon my reporting, there were several Democrats, including progressives like Congresswoman Alexandria Ocasio-Cortez, Senators Elizabeth Warren, who had been pushing for additional relief checks. So there is clearly an ideological debate going on about what type of relief will be needed when President-elect Biden takes office.
What is the story with the social media protections? Donald Trump wants to remove those protections, and it's in the defense spending bill. The Democrats are urging him to pass that, but it's interesting. You would think in normal times, Democrats would also want to rein in these giant social media corporations who, in a sense, some people would say helped Donald Trump win the presidency in the first place.
Here's what we know. The president has threatened to veto the defense authorization bill. This has drawn criticism from Republicans and Democrats. He has done so rather because of the Section 230 protections, which relates to big tech. there are the votes to override that veto. Republicans even have spoken out and said that the defense funding is so incredibly important and vital to America's national security interests that the votes are there to override that veto, even if some of those Republicans are sympathetic to his argument pertaining to Section 230. Finally, as it relates to big tech regulations and the post-2016 regulatory forecast, some Democrats are arguing that big tech is too big and needs to be broken up. We've seen that, for example, with Chairman Cicilline's investigations on antitrust. And in contrast to that, people like Senators Marsha Blackburn and Senator Tom Cotton are arguing that Section 230, like President Trump has made clear, needs to be refined and retooled and updated in order to provide an update for it. But the Republicans and Democrats are looking at regulating big tech from two different ideological standpoints, but what they agree on is more regulation is needed.
All right, Kevin, thanks very much. Kevin Cirilli there in Washington, D.C., reporting on really the news that moves markets globally. I've been saying this a lot this morning, but it's so fascinating that what happens in Washington, D.C., especially when it comes to stimulus, has more of an impact on European markets than what happens in Brussels when it comes to stimulus. So it's fascinating to watch that really move risk appetite. Peter Cecchini of Alpha Omega Advisors saying he's skeptical about the recent bout of market optimism, writing, quote, flows will continue to support equities early into the new year, and it's not clear what will derail the current narrative, which seems to see the glass as half full at all times. I remain tactically bullish on sentiment and flows near term, but the bull narrative is about as hollow as I've ever heard it. Peter joins us now to talk about what we're watching. Animal spirits are just in full force right now. Peter, how long does that last?
Well, it's hard to say, Matt. It's lasted far longer than I certainly would have thought. The assumptions, I think, around earnings growth for this year and next year, and in fact, people are really looking into 2022 to justify their earning targets on the S&P 500 or whatever index you would like to point to, are pretty aggressive. And I think what's being lost here is this idea that stimulus, even when we get it, whether it's monetary policy stimulus or fiscal policy stimulus, acts by pulling forward future consumption and investment. And so the activity that's stimulated today by fiscal and monetary policy stimulus is activity that's lost in the future. And so to some extent, in order to believe that things are going to continue to improve, you have to sort of believe that you can have your cake and eat it too. And I'm just not sure that that's going to be what's in the cards. And moreover, this idea that immense earnings multiples, PE ratios, or whatever valuation ratio you'd like to look at, are justified by low rates doesn't necessarily hold water either, because it's lowering rates further that really is the stimulative effect of monetary policy. And we're at the zero bound pretty much across the curve. And I think with more fiscal stimulus coming, we see the impact on long yields. This morning, treasuries are being sold because I think the treasury market understands that more issuance is coming to fund these large deficits.
Well, and to what extent, Peter, is this a Robin Hood rally? I mean, does there come a point when institutional investors pull the rug out from under mom and pop here?
Well, it's interesting. I've been writing about a Robin Hood rally since September of last year. There has been a real sea change relative to the way investing is done. It's really equivalent to what we saw in the late 90s when people first started to use online trading platforms on their PCs. Now we're seeing it on mobile devices so that people can do it anywhere, anytime in their pajamas without much thought. And apparently people are trying to trade on the weekends when the markets are closed, from what I've been reading. So I think you have a new breed of investor that really is trading on sentiment and emotion. It's something of a hobby for many, a form of entertainment. And I think that's something that, we all need to take very seriously as a new driver in equity markets that is going to take them to both extreme highs and extreme lows when things do change.
Yeah, I mean, there are a lot of new drivers or new participants that we've got to get used to, Bitcoin being one of them we've heard a lot about from institutional investors lately. But surely PEs of 30 aren't here to stay. I mean, that can't last through all of 2021, can it?
Well, again, it certainly lasted 5 or 6 months longer than I thought. When we got the initial stimulus package, it felt to me that equities were probably oversold, and I became consequently bullish. But in late June, I felt that really there wasn't a lot more work to be done relative to multiple expansions, given the multiple expansion, given the uncertainty in earnings. And so multiples have expanded well beyond what I would have expected. I don't think it will last throughout the entire year. But again, I've been surprised already. So who's to say they can't? I certainly don't like the market here fundamentally. It's very difficult for me to say there are reasons to get aggressively long here on what I think is going to happen from a policy standpoint, from an earnings standpoint, or otherwise. But it's also very difficult to think that these flows are going to abate anytime in the near future. Right. So again, tactically bullish into the end of January.
Well, I guess sometimes even if you know the emperor is not really wearing any clothes, you still should compliment his suit. Peter Cecchini of Alpha Omega Advisors, thank you so much for joining us this morning. 20 minutes to go. Bloomberg's Kriti Gupta joins us now with a look at the stocks moving ahead of the opening bell. Kriti?
Well, good morning, Matt. Of course, we are seeing that defensive bid out in front already in that pre-market trading, and a big piece of that is going to be heavy volume in Apple coming off that EV excitement that we saw last week. And this is, of course, extremely important because we see analysts saying that the car may take longer than the 2024 target. Dan Ives over at Wedbush also saying that the iPhone is the best-selling tech product of 2020. So lots of drivers there. And of course, that big tech bid going into year end. And of course, and speaking of things catching bids, cryptocurrency stocks also catching a bid, Bitcoin crossing 28,000. One of those big names to look at is Riot Blockchain, up nearly 18% in the pre-market. Of course, set for a 40%, near 40% rise this month alone. And of course, I just want to skip ahead really quickly to Alibaba. Chinese regulators, antitrust scrutiny. That story is ongoing. Alibaba shares taking another hit this morning, Matt.
Yeah, we'll be watching that Alibaba story very closely, Kriti, especially with the increased buybacks there under increased scrutiny. Kriti Gupta there with some of your pre-market movers. Coming up, the European Union launching a coordinated vaccine rollout as global virus cases top 80 million. We're discussing the impact of the pandemic on financial markets with George Rusnak of Wells Fargo next. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
at a very critical point. I share the concern of President-elect Biden that as we get into the next few weeks, it might actually get worse. We very well might see a post-seasonal, in the sense of Christmas, New Year's surge. And as I've described it, as a surge upon a surge, it is really quite troubling.
We will start to see some indication that the vaccines are probably having an effect, maybe as early as this week. But, you know, it's coming late in the season. We have a grim month ahead of us. We have a very difficult month ahead of us. I don't think any part of the country has really done especially well.
Some top U.S. health officials, they're warning of a post-holiday virus surge with global cases topping 80 million. This as rising hospitalizations threaten additional shutdowns nationwide, and concerns over a faster spreading strain accelerate Europe's vaccination program just 24 hours after its start.
We are starting to turn the page on a difficult year. Today is delivery day, and tomorrow vaccination against COVID-19 is beginning across the European Union. Once enough people have been vaccinated, we can start traveling, meeting our friends and family again, and have normal holidays, which we all long for.
For more, let's bring in Bloomberg's Abigail Doolittle. Abigail, we're seeing a lot of news out this morning and a lot of news out over the weekend on vaccinations. What can you tell us in terms of market effects?
We are indeed, Matt. And before we take a look at a lot of the vaccine makers, let's hone in on Novavax, because we actually have breaking news right in this moment. Novavax is starting its phase 3 COVID-19 vaccine trials today to test efficacy across 115 locations in both the U.S. and Mexico. Now, it is largely expected to show greater than 90% efficacy. In fact, last week, B. Riley saying that this could be the preferred vaccine because it is thought to be easier to transport and store. And Matt, really incredible. You're talking about stock action. This stock up more than 3,100% year to date, now in the pre-market up 2.4%. It had been down more than 1%, so getting a boost on this. And CEO Stan Erck will be joining the European close later on. As for some of the other vaccine movers on the morning in the pre-market, Matt, a bit of mixed action at this point. Pfizer, of course, up ever so slightly. Their vaccine has been in distribution for more than 2 weeks now. Moderna, on the other hand, their vaccine has been in distribution for about a week. That stock down once again, down more than 1%, now down 30% from its peak, its all-time high. So perhaps some sell the news action. On the other hand, AstraZeneca getting a nice lift, up 4% on the news that the UK may approve their vaccine in partnership with Oxford as early as the end of this week, and that they may speed up vaccinations. Now, why, Matt? You were talking, of course, about the fact that the EU has started the region-wide vaccinations. That's a big positive. But take a look at these numbers in terms of the number of doses that the UK is planning on buying. They have now contracted 350 million doses, 28% from AstraZeneca. So that's a big positive if they do get that approval in place by the end of the week. And of course, Matt, in terms of those vaccine numbers that you were talking about, so brutal. Right now, the UK really going in the wrong number. If we go in the Bloomberg terminal, France had peaked a couple months ago, now coming in, the UK simply going higher. So I think that the hope here is that if they get more vaccines out there, perhaps it can turn the UK's numbers back in the right direction or down, Matt.
Absolutely, Abigail. And the concern, I think, the UK and the US can probably do this quickly. Germans don't do anything quickly other than drive. So it's going to be interesting to see if these big bureaucratic European nations can actually speed up the vaccination process. Abigail Doolittle there with a look at some of the most important issues markets are going to focus on today. Let's bring in George Rusnak now, Wells Fargo. He's encouraging investors to move out the risk spectrum, writing, quote, as uncertainties fade, investors should look for opportunities in higher yielding fixed income investments while taking care to avoid being overly conservative in positioning. George joins us now, and you know, this is, you're voicing kind of the message from the Fed, the message from central banks, of course. Don't fight the Fed is one of the first things I learned on my very first day on Wall Street 25 years ago. Is this the idea, George?
Yeah, there's a combination here, Matt. I think the important thing is it's not just the Fed, right? The Fed is extremely accommodative, both in stimulus and low rates.
from an equity perspective, but you also look at the combination now fiscal stimulus coming on board, which they've asked for, and now getting that has led to a very accommodative market. Look, in the fixed income market, in order to get income, you're going to have to take some type of risk. So you're either going to have to take some type of interest rate risk, you're going to have to take some type of credit risk, some type of liquidity risk. From our perspective, it does not make sense to necessarily move out on the yield curve, take interest rate risk, take duration risk. We do think that credit risk is one to be taking right now, and it's been a good performer. The challenge is, Matt, that rates and spreads have actually contracted fairly significantly there, so you really have to be careful and cautious about it. Right now, about 75% of the high yield market is either double B or single B. Those are the areas you want to be looking into the higher quality, higher yielding assets, not necessarily into the triple Cs. You have to be really selective here.
What about in terms of region? I mean, do you stay in the U.S. Where animal spirits are strongest and activity is unhampered by regulation, or do you go into Europe? Do you go into Asia, into developing markets?
Developed markets and fixed income is pretty challenging right now with negative rates per se, but what is becoming more interesting is emerging markets. And especially if you look at sort of the weakening dollar, Matt, you're looking at a good opportunity there. We're currently neutral, but we're looking for opportunities to potentially look to get a little bit more aggressive within emerging markets. And again, if you look at sort of the components of where you're going to get return, income per se, if you're looking at rates coming down, not probably very likely. If you're looking for spread impact, spread reduction, not too much. But if you look at currency effects, you could get some pickup there. Again, from our perspective, our benchmark is actually dollar-based. So we wouldn't see as much of that, but that is one of the things that we're seeing as compelling opportunity. If you can get in emerging markets and take sort of a little bit of a stance against the dollar, you can turn out pretty well there.
You do think diversification is key here, though, and you want investors to be looking at not just fixed income, but equities, real estate, alternative assets. Is that the case?
It is. It is. So the way we look at it is, if you look at just extremely low rates here in the U.S., 95 basis point for a 10-year treasury right now, the question is, where do you get income and safety? And that's a challenging thing right now. And the way we're looking at it is, one, you can't ignore rates where they are right now. They're very, very low, and we think, unfortunately, they're going to be there for a long period of time. The second thing is, to get the safety aspect, it's a little bit more challenging now, right? Because durations have actually moved out. In the case of the Barclays Ag, you actually seen durations move out 15% over the last 5 years. So you're getting higher interest rate risk and lower returns. So what we're saying to combat that is, again, don't ignore it. Don't look for one panacea type of solution, but take it in sort of an incremental and a holistic way, meaning take a look at your increments of income within fixed income, within equities, within real assets, within alternatives, and look at risk adjusting those types of returns. Those types of incremental returns will offset or mitigate some of the challenges that you're facing within fixed income right now.
George, let me just quickly ask you what you expect from a Biden administration.
So it seems to be pretty accommodative, seems to be also potentially trying to work across the aisle, which may be necessary depending upon what happens in January 5th, but we're pretty encouraging around that. There's already signs that we may look for a second fiscal stimulus after this one that was just announced, and that could be another boost to the economy. But the more important thing is, if there can be a working across aisles, there can be actually movement forward on a lot of key issues that there's a fair amount of agreement on. And so we're really hopeful to see some of that in 2021 and 22 pan out.
George, thanks so much for joining us this morning. George Rusnak there from Wells Fargo, talking about his advice in 2021, his forecast for what to expect as well. Coming up, the analyst action that you need to know this morning. That's next in our morning calls. And then later, Chad Morganlander of Washington Crossing Advisors joins us at the opening bell. This is Bloomberg.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Good morning, I'm Matt Miller, in for my good British buddy, Jonathan Farrow. This is the countdown to the open. It's time now for our morning calls, a look at some of the analyst recommendations on Wall Street this morning. And we'll kick it off with Wells Fargo, raising its price target on Disney to $201 from $182, but maintaining an overweight rating on the stock. You can't really go much better than that. The analyst revising his outlook for the company's direct-to-consumer ramp-up on the heels of its investor day, and surely this lockdown has really helped Disney Plus. Next up is Mitsuo, raising its price target on Applied Materials, $96 from $82. The analyst citing macroeconomic tailwinds and strong momentum for the semiconductor space heading in.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
All right, welcome back to Bloomberg Markets. This is The Open. I'm Matt Miller in for John Farrow. Let's head over to the markets desk. Bloomberg's Kriti Gupta joins us now with a look at what to expect as it all unfolds, the miracle of Wall Street before your very eyes. Kriti, what do you see?
Well, Matt, of course, we are seeing those cyclical names outperform the travel sector really out in front here. American Airlines and United, those airlines, like I said, rallying off that stimulus and vaccine rollout drivers. American Airlines in particular seeing more of a bid. This, of course, coming on the idea that stimulus includes a $15 billion allocation to some of these airlines, which means that they can actually bring back some of those furloughed workers. So, of course, airlines, once again, some of the most volatile stocks this year are catching a bid. That, of course, in line with American beginning to fly the 737 MAX tomorrow. So, once again, American getting that a little bit of extra bid. You're seeing that same sentiment cross over to the cruise lines as well. Carnival, Norwegian up as well. Flip up the boards, you'll see another major sector catching a bid right now alongside that Bitcoin rally is those crypto stocks. Riot Blockchain, that outperformer, wrapping up or on trend, I should say, for a near 40% rally this month alone. This, of course, coming off the same margin of gains in November and October as well, of course. And this, of course, coming in line with some of those payment names that have already accepted Bitcoin as payment methods. So PayPal, Square, Overstock, also rallying with that cryptocurrency. So once again, Matt, a very cross-currency picture here, cross-asset picture, I should say. And of course, that cyclical bid, like I said, out in front this morning.
All right, Kriti Gupta there, looking at the market open this morning, and you did hear the opening bell. We do see the continued bullishness here. Gains we have in Europe, of course, big gains, up 1.5% here. In Germany, we're at an all-time record, and gains again in the U.S. across the Dow, the S&P, and the NASDAQ. Wherever you look, risk on is where it's at on this Monday morning. Global M&A activity also staging a dramatic comeback from near decade lows in 2020 with a string of transactions in the second half of the year building momentum.
We have an acceleration of M&A off the back of increased confidence of the positive impact of the vaccine on economic outlook, and that is building confidence in our mind. We've seen a huge uptick in announcements. As you well know, 40-plus transactions bigger than $1 billion since May. Lots of activity on the rise in North America and EMEA specifically, and a lot of the activity is going to be cross-border in nature.
All right, Tyler Dixon there. For more, let's bring in Bloomberg's Abigail Doolittle. Abigail, I have been more and more this year, I've been typing MAGO on my Bloomberg, and the picture just looks better and better.
It does indeed, Matt. It really is a year of two halves, because the first year of 2020, not surprisingly, M&A activity, deal activity really at a 10-year low. This, of course, is the pandemic struck, and CEOs were trying to figure out what to do. But the second half, right now, on pace to be the best second half since 2015, at about $1.3 trillion in M&A activity. That confidence that we were just talking about there, really the big key driver here as investors, or CEOs and executives no longer planning what to do in emergency mode around the pandemic, but in aggressive offensive mood in terms of what's next, looking at a post-pandemic world. So some of the biggest deals that we've seen more recently, the biggest deal, IHS Markit, bought by S&P for $43.5 billion. Then you also have Alexion going off at $39 billion. Xilinx bought by AMD in October for nearly $33 billion. So some really big names. And of course, coming back to that key factor of confidence, we have a really interesting chart in the Bloomberg terminal. Back in 2009, in the depths of the financial crisis, not surprisingly, CEO confidence was in the depths. At that point, and that's shown there in white, at that point, deal activity shown in blue was also in the depths. But over the last 10 years climbing, you can see, though, that there was a brief period earlier this year, Matt, though, when deal activity was literally where it was 10 years ago. At that point, CEO confidence dipped a little bit, but as CEO confidence is coming back, so are those deals. And the expectation is this will carry right through into 2021, Matt.
Awesome. Abigail, thanks very much. Abigail Doolittle with a little M&A insight for you there. Let's get over to Chad Morganlander of Washington Crossing Advisors, remaining bullish on risk heading into the new year, but keeping an eye on interest rates, writing, quote, as rates move higher, it will have an acute effect on price targets for growth stocks. The discounted cash flow back to present value will continue to come under pressure. Chad joins us now, and really, first of all, good morning. Thanks for joining us. Really, Chad, it's amazing how this rally just continues marching on with rates heading down to 0 and PEs up at 30. How much longer does it last?
So for the broader market, it's anyone's guess. What we're doing and how we're advising investors and managing our portfolios is we're moving more towards higher quality investments that are more on the value side, looking at the predictability of earnings stream. We would be very careful and cautious to be buying many of these high momentum companies, in particular at this late stage in the cycle.
So where do you find that kind of quality? I mean, when we see, I have to say, for the first time in years, I have friends from high school writing to ask, since I work in the financial news, do I know where they can get hold of some of this new IPO syndicate? Where do you find the opposite of that?
So you could look at different sectors like industrials that have not performed as greatly as many of these tech names and momentum names, or look at healthcare companies. Healthcare companies have been left this year in the dust in regard to performance. Those type of companies have a level of predictability, will improve in particular on the industrial side, because we're believers that the second half of 2021 into 2022 will show some vibrancy, not only here in the United States, but also across the globe, and that those trends, economic trends, could be much better than consensus estimates.
So you believe in a rotation to value, maybe even a rotation to Europe over the U.S. or EM over the U.S.?
Correct. So we have set up the portfolio where we trimmed back our growth allocation, moved more towards EM. We were not fully exposed to EM for the last 3 years. Now we're overweight EM, as well as we're overweight international in regard to Europe. We believe, again, that traction, as you start to see the healthcare concerns start to dissipate in the second half of the year, could bode quite well for international.
In terms of U.S. stocks, though, you like Disney, and I've been seeing more and more people talk about Disney Plus, the transformation this company has undergone throughout the pandemic. Is that one of the reasons?
So you also receive the added benefit, again, of theme parks opening up. The company has been able to transition to this digital world where there were somewhat more suspect and concerns about that. We overall will hopefully will own it for the next 3 to 5 years. We believe there's a tremendous amount of stability and predictability of their free cash flow. The balance sheet, we believe, is quite sturdy. And we think that overall you're going to get this to be more of a rising dividend story over the next 3 to 5 years. So that's a consumer discretionary company along the lines of benefiting from the strong consumption patterns that we believe will happen in 2021.
What about waste management? Why do you like waste management right now, Chad? Is it because more people are staying at home, creating more waste, or is it a more complex investment?
So, Matt, that story there, unfortunately, they've actually have been hurt by the shutdown of the U.S. economy. With that said, in Q1 to Q2, they were highly profitable as well, but revenues were off about 10% to 15%. We believe that as the restaurants start to open, colleges and universities start to open as well, then that company will be able to benefit from the U.S. opening. So again, a highly predictable name, very sturdy balance sheet, quality, and predictability. Waste management, we believe that you should own it for the next 3 to 5 years. So these are longer term plays. But again, it's an industrial that's more of a steady eddy.
Interesting also to see how much more they go towards recycling, waste to energy, and that kind of ESG play. Chad, thanks so much for your time this morning. Appreciate it on this Monday. Chad Morganlander there joining us with some of his picks and his outlook for 2021. With that, let's head back to the markets desk Abigail Doolittle joins us with a little bit more of the action. Abigail?
Well, Matt, we have synchronized all-time highs for the Dow, the S&P 500, the Russell 2000, the NASDAQ, and the NASDAQ 100. Let's take a look at some of the movers behind that strength, starting out with the key driver, Apple, up 2.1%. This, as Dan Ives over at Wedbush is saying, that he believes that the 2020 iPhone sales are going to surpass 2019 despite the pandemic. He has an estimate of 195 million phones to be sold versus 2019 at 185 million. Tesla up 2.1%. This is India is becoming a new market for the company. They will start selling their electric vehicles there in 2021. AstraZeneca still popping, up nearly 3%. It's expected the UK will approve their vaccine later this week. And Boeing had been higher not so long ago, Matt, now down ever so slightly. And interestingly, tomorrow, the US will start having the 737 MAX back in the sky. Again, Boeing had initially been reacting positive to that announcement and that news, but now down just a little bit. But overall, we have lots of strength and record highs.
That is fascinating. Would you get on a plane in the age of COVID, and would you get on a plane if that plane were the 737 MAX? I think two questions that consumers might be asking themselves starting tomorrow. Abigail Doolittle with a couple of the movers in the early action this morning. Coming up just over a week to go until the Georgia runoffs. These big, important elections could change the next year, the next 4 years for American consumers and businesses. That conversation still ahead with James Camp of Eagle Asset Management. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The Georgia races are important because control of the U.S. Senate is at stake. While Republicans have had an edge in holding on to those two seats, it was very possible, and it still is possible, they could lose both, in which case Joe Biden will, contrary to current expectations, have a chance to implement really the greatest part of his agenda with regard to energy, clean energy, that is, infrastructure, healthcare, and, of course, stimulus.
A little bit more than 1 week to go before those Georgia runoffs that will decide control of the U.S. Senate. Bloomberg Chief Washington Correspondent Kevin Turilli joins me now with the latest. And Kevin, it's interesting the way Donald Trump has kind of interjected himself in a way to these runoffs by almost siding with Nancy Pelosi and the Democrats on the $2,000 stimulus checks.
Well, it's really playing out virtually on the op-ed pages in the conservative ideological spaces. Look no further than the front page of today's New York Post in terms of the op-ed there, urging the president to forget about his trying to overturn the results of the election and to focus on Georgia, because Georgia has significant policy implications for the Republican Party if they are able to keep the seats of Senators Kelly Loeffler as well as David Perdue and withhold them from going to Reverend Raphael Warnock and John Ossoff. Then they will be able to have a majority in the Senate that gives Senate Majority Leader Mitch McConnell the ability to push through not only some more centrist policies, but also to act as a conservative backdrop against the progressives. Remember, should the Democrats be able to win this state, a state, mind you, that for the first time turned Democratic in 2020 since 1992 when Bill Clinton carried it, then they would be able to really have a situation where the Democrats can really push through a much more progressive agenda. What does that mean? In the immediate short term, if the Democrats take this, are to pull off this upset, and the President-elect Biden's first 100 days pushing through economic relief would be much easier. But even if it becomes a tie where Vice President Kamala Harris is casting the deciding tiebreaker vote, it's not a situation that Leader McConnell wants to have. In terms of the committee makeup and bills getting out of committees, the dynamics and the math in terms of the majority of the committees also at stake here. That drives a policy narrative for the next 2 years that is something Leader McConnell really wants to keep hold of.
All right, Kevin, thanks very much. Kevin Cirilli there joining us out of Washington, D.C. with the latest on the races we will be watching so closely. James Camp of Eagle Asset Management weighing in on what the shift in power could mean for markets, writing, quote, assuming one Republican wins in the Georgia runoff election and Biden has a left-leaning cabinet, it should be a market positive. So James joins us now, and I guess the message, James, is gridlock is good.
Yeah, Matt, good morning. I think part of the fears for markets would be a serious tack to the left in terms of progressive agendas. And I think that's been muted somewhat by the events of the election and what may happen in Georgia. So I think when we look at the Biden cabinet thus far, I think it's market positive. I mean, you brought the former chair of the Federal Reserve over to Treasury. We know what that partnership looks like between Treasury and Fed in terms of stimulus, and it's massive. You probably get at least one Republican in Georgia. So your tax agenda, which could have been more problematic, I suppose, for the economy, pulling back some of the tax cuts and corporate tax increases seems off the table. So as the political landscape plays out, I think we do have a market positive event coming into 2021.
You mentioned Yellen coming back in Treasury. Does Powell, you think, stay as Fed chair?
Yeah, I think he does, Matt, but I think the big question is going to be, and this goes back to the congressional races and why they're so important. You know, Mnuchin sunsetted a lot of the CARES Act to some great fanfare, which I think was a bit misguided. You know, that CARES Act facility in Treasury gave the Fed essentially unlimited buying power in the capital markets. And if that gets curtailed or a Republican split Congress does not allow reauthorization, some of the Fed firepower may come back to earth a little bit. And frankly, I think that's healthy long-term for the capital markets.
What's your playbook look like, James, if the Democrats indeed win control of the Senate? What are the last-minute changes you're going to make look like?
Well, most of our portfolios are income-oriented, and I think that one thing that we're going to watch very, very closely in early 2021 is some of these base effects of GDP and inflation, which could go higher, could move rates higher. But we will look to see if there are more progressive-leaning movements on taxes, on regulation, which we know that part of the Federal Registry just collapsed under the Trump administration, how costly and burdensome those may be, particularly in energy, healthcare, and the like. But we'll look at where policy affects different types of our asset allocation. But for now, we're still pretty upbeat about just the massive stimulus that's in the economy, base effects, which are going to show great GDP growth, and frankly, the vaccine and that rollout, I think, being administered probably in a more judicious fashion under a current administration. So all of those signs to us point to better growth and better prospects for capital markets in early 2021.
And you expect more income growth in terms of when we get this recovery, we're going to get dividends raised, we're going to get buybacks back in this market.
Yeah, interestingly, we already had that announcement last week with the financials being allowed to continue to buy back stocks. We've only had 60 cuts in COVID recession. During 2008, 2009, that number was 90 plus. And our equities, where we use an agnostic approach to income bonds, stocks, preferreds, et cetera, have continued to produce and continue to compound with growth rates very, very high in the 8-9% range. The problem for income producing assets, as you know, is relative to broad markets and to the growth side of the market, they've lagged on a total return basis, yet the utility of their income and the compounding of their income, we think, is safe and, in fact, about to accelerate.
James, thanks so much for joining us. Really appreciate your time this morning. James Camp there, Eagle Asset Management Strategic Income Managing Director. Now, for some of the action this morning, let's check back in with Bloomberg's Abigail Doolittle. Abigail, hitting all-time highs on a number of different indexes.
Indeed, Matt. It certainly is a risk-on tone this morning right across the board for stocks, also cross-asset, as you've been bringing up. But relative to the S&P 500, that risk-on tone is supported beneath the surface, too. If we go into the Bloomberg terminal and check out the IMAP, we will see all 11 sectors are higher in the green. The best sector right now, energy, up more than 1%. So that's certainly a risk-on, that growth sector. Behind it, technology up almost 1%. So it's interesting to see this year's growth plus this year's defense leading the way, a nice compromise. Then you have the financials in the middle. On bottom, real estate up about 0.1%. So again, investors on this last day, or last week, I should say, of trading are very much into stocks. On the month, Matt, it's pretty interesting because, of course, we have this huge year for stocks, and tech has been leading the way. More recently, I should say, in the quarter, tech has not been the top performer. But this month, in December, tech is up top, followed by healthcare, and then financials. Pretty interesting, Matt, and I bring that up only because, again, tech is this year's defense. So as the virus has gotten worse around the world, you see investors not shunning stocks, but really favoring, once again, technology. And then healthcare, making healthcare even more interesting is the fact that some of those vaccine makers have been down pretty sharply over the last 2 weeks. Some sell the news action. Will we see it bleed into other sectors?
I will tell you, here in Germany, we're also seeing all-time highs. And I think, interesting takeaway is the biggest gainer is Delivery Hero, which is a food delivery service. It's up almost 10% today. Month to date, it's up 30%. Year to date, it's up 83%. So the biggest winner. And here in Germany, you actually have some of the healthcare stocks down year to date. So Bayer, Fresenius, they're the biggest losers on the DAX. It's really interesting to compare and contrast the DAX to what you've got going on in the U.S. Of course, it's a completely different ballgame when it comes to U.S. tech stocks compared to what we've got here in Europe.
Yeah, certainly a divergence there, Matt, to keep an eye on. And it just seems as though investors are really moving toward the post-pandemic world and the changes that will happen, that delivery company being an example of that, and a lot of the tech companies here in the U.S.
Abigail Doolittle, thanks very much. We'll check back in with you throughout the trading day. Coming up, the market moving events that you need to be watching. That's next in our trading diary. This is Bloomberg. Time now for the Trading Diary, what you need to be watching this week. President-elect Joseph Biden speaking at 3:30 p.m. Eastern Time. Investors definitely want to get an insight into what he does first. And the House expected to vote on the stimulus check increase later this afternoon. Will you be getting an extra $2,000 in your post-Christmas stocking? Plus a lot of data coming on Wednesday with wholesale inventories and Chicago PMI numbers as well. In the UK, the House of Commons votes on the Brexit deal, but that's pretty much a foregone conclusion. On Thursday, we get the last round of weekly jobless claims for the year, something else to watch in America. And finally, global markets closed on Friday for New Year's Day. 26 minutes into the session, we still have record highs across a number of different benchmark equity indexes.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
What's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. Because I think life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
That's our language, basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings there.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.